Good morning, everybody. Can I get a check?
IB alert.
NQ, pending VPOC alert. NQ, pending VPOC alert.
Thank you. Thanks for the check.
Mark liquidity. Mark liquidity.
Mark trade zones.
Absorption ES buyers at 3,768.25.
Good morning, everyone. Welcome to the Traders Lab. I'm your host, Tom B. Streaming live 11:30 a.m. Eastern Standard Time, Monday through Friday. Today is June 15th, 2022. Wednesday, and it is FOMC day, which means this is a significant day. And we have a big situation going on with what will the Fed do regarding raising rates. 50 bips or 75, of course, is the question. The market seems to have baked in a 75 basis point bump, and I suspect what we were seeing this morning, since the market has been heavily on the sell side, was some short covering. However, one never knows when it comes to these events. So let's get going. We're going to take a look at a couple of scenarios that played out this morning, especially something that we talk about in the Trader Lab, and two opportunities, both of which did not reach their objectives. This is to keep it real, because that's the real world of trading. So we'll talk about those. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. And as I always do, I give a brief overview of what we are attempting to do. So please bear with, and it never hurts to get refocused on the process that we use here in the Trader Lab. And I'm going to invite all of you who are in YouTube, if you haven't done it yet, to come to the Bookmap Discord Traders Lab chat, where you can interact with other traders. And the whole focus of that chat is for the collective growth. We have traders in there who have 50 years experience, down to newbies. And it isn't so much down to, we all started out as a newbie. But maybe with a little guidance, our learning curve might have been shorter. The basis of the approach is auction market theory. You already practice it if you ever shop. That is buying something when it's on sale. When you perceive the price is below value, you buy more. When you perceive the price is too expensive, you back away and you don't buy it. And then the sellers of that product need to lower the price back down to create the volume or the interaction of the retail behavior that creates volume, so they can get the highest volume and make their net. And that interaction is represented in the auction. That is the behavior, and we can see it using a tool called the market volume profile. Volume profile is very simple in the sense it represents price and volume at any specific price point. In the auction, this behavior takes place in all time frames. So we can align with higher time frames with the same process using more micro time frames to potentially engage or execute in the market. And that is one of the things we'll be evaluating and observing, this interaction of multiple time frames. But this is not about scalping. This is about potentially finding locations to take advantage of higher time frame interaction. And it is in the higher time frame swings, and you have to define higher time frame per your view of time frame and swings. So for example, if you're a day trader, that is one thing, but there are many swings intraday in the market, subject to the context. Context is something that most of us take a while to get our head around. For example, we can be in a downtrend, but the market can be rotational. The process of trading the downtrend is different than trading the rotations inside the downtrend. So not only is this about the short-term fractals, but it's also about the alignment potentially inside of different time frames. It can be confusing, I understand, but we all start out initiating a trade in the shortest time frame, subject to the overall higher time frame we're intending to trade in. A little confusing, but on the other side of that, it is the individual trader who can create the plan for their own psychological alignment relative to their account side, risk, etc. And that is something that the individual decides. The objective I have is to show you ways you might be able to incorporate that, create a plan, and my approach here is to share what I perceive to be the minimum potential or structures to operate with, and then it's up to each trader to expand upon that once they have a basic understanding of market mechanics. This is not indicator based. This is behavioral. So it's the interaction of the participants in the market, not a backwards looking indicator. I don't use indicators. Now that's not saying anyone should or shouldn't, but I find if I'm looking in the rear view mirror, I'm not seeing what's right in front of me. And Bookmap is the tool. It's an order flow tool that allows us to see inside the microstructures. And for me, that tool has helped me better identify and create actionable scenarios in shorter term time frames when I perceive an opportunity for alignment. And that includes things like stops, icebergs, order flow, volume, volume delta, things of this nature. And there's much more, but for our purposes, am going to keep it to a basic level so you can see how order flow tools might have a place in your plan. And that's also up to each individual. That's our process, so I hope that makes sense. Also, please grab a pen and a piece of paper. Please take notes. You're investing your time, so please get the most out of it if you find value. And again, for those of you who are new, I invite you to join the Bookmap Discord Traders Lab chat to interact with other traders and leverage the experience of all these diverse traders with diverse approaches. The only thing we ask is when you do have, quote, an opinion, that it is based on some kind of support so we can all grow from it. And that's the purpose of the collective. So you're invited. And in addition, Bookmap offers free education, how to use order flow, on futures, stocks, options, crypto, and that's all free. You don't even need to be a subscriber, and nobody will solicit you or do any of that kind of nonsense. So you can come in, check it out. In addition, in the Trader Lab Discord chat, pinned to the top, there are downloads of some of the structures we're going to be observing here in real time, and that's available to you. There's about 80 different configurations and meticulously detailed charts of some of this phenomena that you may find interesting and you may incorporate into your process if you see value in it. And there's also a basic introductory webinar that I did that's also pinned to the top of the Traders Lab chat that you might want to take a look at. It is basically a primer on how to integrate these tools: auction, market theory, volume, profile. You don't have to spend your life trying to figure these things out. There's no reason to make something that can be simple into complexity. Complexity obscures, so we try to stay away from that. Anyway, I hope you find that useful, and again, welcome to the Traders Lab. So let's take a look at what's going on. Now I'm going to share with you two opportunities that did not work out today. So I hope you're going to enjoy that as much as we did. Now, let me find the first one. Now we have something, and it's in the Traders Lab. I think it was. Let me just make sure I have the right one. Yes. And we call it the IB failure. Now, there's a couple things about this, and here's the reasoning behind it. The nature of this trade. And what it is, it's a mean reversion trade. It is basically a long after we have the initial balance taken out. Now, so you guys who don't know, the initial balance is the first hour of RTH, high or low. And it is called the initial balance. It's a volume profile, market profile term. Okay, so this is the IB low. Now let's put the context together before this. We open and we're above yesterday's value area high. Value area high is where 70% of the volume took place. And based on statistics, where this 70% is called, where most of this volume transacted, is kind of what's called the value area, and that's where there was acceptance of the price yesterday. So we opened above it here. So we opened out of value, okay? Yesterday's high was here. Now, in the previous streams, I have mentioned that the market was heavily short and that there was a potential, and we don't know, of course, because we know we don't know, and write that down. But it's all about potential in trading, isn't it? There's no certainty. The best you have is maybe. Please write that down. Now, you may think you can, quote, predict the market. I think we all think that at some point in our career, but I have a philosophy that if I keep my mind in the I know, I don't know, I can better respond to what might be demonstrated, because it isn't up to me. It's up to the interaction of the participants. So that's just something I've needed to do so I don't become myopic. That's it. So you might consider that. And again, it's not what I do, it's what you might find from your own experience, or you still need to have experiences, and your experience, of course, will be different than mine. So we open above. We're outside of value. Now, we're inside a range, but the market is saying it is out of balance. So when we're out of balance, there's a few things that can happen. We can come back in and check. So potential mean reversion, come back. Or we can continue higher, etc. So we don't know, right? So let's take a look. So yesterday's high, we know there's potentially stops up there, okay? So off we go, you know?
ES, pending VPOC alert.
And this becomes,
pending VPOC alert.
wherever it is, right up in here, the high, around 3,800. So now we don't know. Now I have a couple levels up here, which I have marked previously, and these are called high volume areas. So it's around 90, let me see where this one is, 97 quarter to like 3,800. So those are areas that are left behind that might be, again, might be material. But I don't know this, so I don't want you to think I'm clairvoyant, because look, nobody is. But I know those areas meant something. And what they represent is in the 2-day overlapping time frame. In other words, yesterday and the day before. So Monday, Tuesday, I draw what's called a microcomposite. In other words, I combine those 2 days to look at the volume because they're overlapping. So that interaction is the beginning of a potential consolidation since they're overlapping. And since I'm trading inside of the previous day's range, that's important. So I want to see where these levels are. And this and we call them a microcomposite. This level, microcomposite high volume node, was like one of these. This is a consolidation, and it took place on the high side of this overlapping 2 days. It looks like this, except it was in the 2 days. So this high volume, again, looks like this. This is not it. I mark it on the chart, and it's called a microcomposite high volume node. And it is basically, remember the auction? Too low. I like that. I'm buying them on sale. Up here. Oh boy, that's too expensive. I'm not paying that. Let's agree on this price. Let's do volume in here. Remember retail. We all like this price until we don't. And then we go, let's just go check someplace else. Can we go and auction elsewhere? And this is the nature of the auction in all time frames. But over the last 2 days, this was an area we had left behind. And it's represented by this high volume node in that 2-day overlapping consolidation. Does that make sense? Is everybody following me? MD, I do use the ETH for levels because that's the most recent auction. In fact, that's one of the reasons that I took some trades here that I'm going to discuss with you. Carmo trades, the difference between a microcomposite high volume node and a composite high volume node is time frame. The composite high volume node takes all the volume in that is ever traded here, period, all of it. Okay, and currently, since I'm bringing in volume from January 2020, and the lower we go and we start overlapping, depending where we go here, of course, 2020, 2019, I'll be pulling in all the volume, and it's going to identify these areas. It's coincidental, but the fact that this was here, and now this is new, this was just created yesterday, but they're in alignment. Again, I don't, I have no idea. To me it's interesting, but the most recent auction is where I give priority. So this has been hanging out, since we were here last time. And it will move slightly as the volume changes. But this is current. This happened yesterday when we had the overlap. So this is a new. So as we unfold the story, I kind of look at it in what's the most recent. So if you kind of prioritize these things, we have yesterday's RTH, then we have the ETH, which is the most recent behavior and auction, and then as RTH, which is today's trade, starts developing, then it supersedes the ETH. But the ETH is my most current auction that I can try to lean against, and that's what I did. And you'll see that we took a couple opportunities that didn't play out, and that's life in the fast lane, right? So I'm going to show you those because it's not about what also works. It's just the nature of a trade, and I hope you guys understand the outcome of any one trade is random. It's really about following a trade plan, and then whatever happens, happens. So I can't pick the high of the day. haven't figured that one out yet. But I do know the potential for behavior. So I saw this. Now, I'm not going to talk about earlier trades because I want to show you what didn't work. You know, it's easy to show you what works, but I want to show you just 2 trades that didn't work. I think it's just as important. In fact, I think it's more important because, you know, I want you to see I do not cherry pick these things. I just trade potential, and that's all we got in the market, right? So here's the potential. We have a thing that we observe, a trade, and it's documented in the Trader Lab. If you guys are interested, if you haven't downloaded, I have about 80 PDFs of different trades that we regularly observe and document in the Trader Lab. And you're all invited, if you haven't done it, to come over to the Discord Trader Lab and download these PDFs. They're pinned to the top, and you can all have them. Give you something to chew on over the weekend if you want. Here in where I am, it's going to be 100 degrees. This is a good day to do research after the market, or water your tulips. So I want to show you this. The trade is called, anybody have a question, by the way, before I move on? I just want to make sure I don't want to forget everything. Okay. All right. It's calm. That's interesting. Okay. This is called the IBF. And I didn't know what to call it. But let me tell you again, I gave you a little background why I would go long when we're making a low of the day. Okay, at the time. The reason is I'm out of value. I have shorts in here. And this is a mean reversion trade. And it is subject to context. Remember context? That's why, and there's other times, depending on context, where I would be looking to get short.
ES, pending VPOC alert.
And I did actually, after this one didn't work. And that one didn't work either. So you're going to go, well, okay. The reality of it is this is trading. So let's take a look at this. I'm going to show you what's going on. So if we anticipate that this is a stop flush, and we see icebergs. This is an iceberg detector. This is our stop detector. 320 sell stops under the low of the day, which is what this is. This is the first hour low, remember? So, and that happens at 9:30 Central Time, 10:30 Eastern. So that low, wherever that was created back here someplace. I hope. It should be. Yeah, over here. So, and that first hour does not lock in until 9:30 Central, 10:30 Eastern. Okay, so this was the low, and that creates the first hour low. So I hope you guys are with me. So we went all the way up to, to that micro composite high volume node CHVN up above, and we failed off of there. So that looked to me like, okay, that might be the high end of the day, and at the time I don't know. And when we come back into yesterday's range, okay, it looked to me like, well, maybe we're going to flush these guys, but since we're out of value, we can now come back in after we take these guys out. Is that logical? That is called the IB failure. So it's a trade we, look at. So let me get back here. So here's the initial balance based on the early low, and this is the first long for mean reversion. So I guess you guys are with me now? Is everybody tracking? Just want to make sure we're in alignment. Okay, because this is the real world. We got to be real, right? So, be nice if every trade worked, but let's be real. They don't. So, but here's the trade. Now I want to show you the trigger. So we have a couple of things. Context, right? So this is a long. And the goal of the long, if the potential is, and remember the context, we're out of balance, okay? So it's rotational. Once we get the stops, if we have exhaustion, then we have the potential to come back inside. Okay? That's the thought. That's why, and that's the basis of this potential trade. So let's look. Where does everybody keep their stops? Initially under the low of the day, if you're long, right? So that's the idea. So here we have it. Okay, iceberg stops, you know. And now here's another thing I like to look at. Let me try to get this lined up. Now, you know I like to look at micro volume. So here's what I'm looking at. This is a consolidation. So we break out, we take out those longs that long early. Remember, we're under the first hour low of the day, initial balance low, okay? And we take it out, chop, chop. So here's the stops, here's the stops. So this becomes, now you notice we run through the stops and then we consolidate. So I'm looking now, and I don't know, because nobody does, are we going to come back inside? Well, maybe, right? So I'm looking here. And my trigger on this, and it's just me, as I'm looking at this volume here, because that's, let's remember auction market theory. Too low, in other words, low, oh, it's on sale. I'm not paying that. It's on sale. Nah, I'm not paying that. This is a micro auction, right? Auction market theory. Ah, it's too high. I'm not going to pay that. Sellers at the IB low. I like this price. And iceberg. Right here. Iceberg buying. It's a little obscured. 500 icebergs. Huh, that's interesting. I see the book coming up. That's interesting. This is now how I'm using Bookmap. It's subtle, but I'm at a location. Remember, it's the context up, the location, stop pick under here, the book, the liquidity changing in the icebergs. I have a confluence, and this liquidity taken on and not coming back in the book. So, can you see these pieces? So I have a number of pieces. It becomes a long. And here, it was a long for me right here. You know, lovely. So then the next job is what? Scale. So then my entry is from here, stop goes under the low. And that's around my 3-point range, which is kind of my comfort area. So if I'm using, but I'm going to be quoting, so you guys know, is I'm building this on a 2-lot process. And the reason for that is that as retail traders, in my view, and I have to say it's not a recommendation, it's just a viewpoint, you need to focus on risk management first. In other words, the scale. So it's a 2-contract process. The first contract's goal is to pay for your stop. Now, if a trade fails, you take a full stop. That's life in the fast lane. However, if you get risk neutral, which means after you achieve your first scale, you now have purchased the ticket to ride. And then the next objective is the target based on the potential of the trade, which does have targets, and those targets are based on retail trader behavior. Is everybody aligned so far? The long is right here. So whatever time that is, 9:56-ish Central, so 10:56 Eastern Standard. So right here. Okay, you can see it on the chart, I hope. Now look at the pieces. Icebergs.
Absorption, he has sellers at 37.79.
The book. The location. The potential behavior. Align with the context, out of value from yesterday. So you need to think of in the pieces. Do the pieces support the context? So it's a long. And if you're risking 3, you got, so 70,
VHVN.
Scale, if it's 3 points, 3.5, you're now risk neutral. Now, here's the targets.
Long impulse. EX. Long impulse.
VHVN.
VWAP, mid are the primary targets for this trade. So we got a scale, and then what? No bueno. This is called almost, but no cigar. The trade fails under the structure. So, and the worst that would happen is your broker sends you the gift basket. Okay, trade fails. Now, so far, and I have to say so good because this is real. I mean, in the sense of the real world. Does everybody see it?
VHVN.
Other brother, that is the trade.
VHVN.
Marcus, if the structure fails that you initiate the trade on, at least for me, and I'm saying is you got to do what you do, then, that's that. You just have to these are ideas, and, you may have a better idea. That's the idea of the Trader Lab. Jenny, it failed when it came back. That's all. Didn't get to its target. That's just, and I'm showing you, I'm not discussing trade management. I'm discussing what I consider minimum parameters. After that, it's up to each individual to build, So this is not a trade plan. I am showing you fractals, how to potentially initiate, how to get risk neutral based on a 2-lot, and that's it. After that, this is not a, quote, trading course. This is an attempt to show you some processes, and then each individual develops a trade plan. If this is useful, you kind of wrap a plan around this. Trade management is a function of time frame, So, I mean, depending on how you look at this, you might have been out here, This is a short, by the way, trigger right here. So this right here is a short. So do you exit on the trigger? You see? That's a matter of your trade plan. So I'm not discussing that. I'm discussing initiation. I'm discussing potential behavior and risk management, and then trade management is a function of time frame. So that's an individual thing. If you're trading a higher time frame, then you would not be, if you were bullish for some reason, which I'm not, which doesn't matter what I am, because we're going to have the Fed, and that may change everything. But in the developing time frame, this was a long, and it's strictly a mean reversion trade. Okay, so your trade management is your personal process. You need to develop that. Okay, what I'm sharing is the trigger, the context, and where a trade fails. That is not trade management. I hope that clarifies it a little bit. Okay.
ES. Pending VPOC alert. ES. Pending VPOC alert. ES. Pending VPOC alert.
Okay, so let's look. So this one failed. Came down, took it out again. All right? Now, failed means it's a scratch, assuming you just held it to the originating structure, right? That to me is the minimal. In other words, if you're using no trade management and you're going to sit through the rotations, which are also random, then that's something you might accept if that's aligned with your trade plan. And the way you kind of sort that out is metrics. You have to keep statistics. And that's not, part of what I do for, you guys have to kind of do that for yourself, because that's really a personal thing, and you have to measure, the distribution over a large sample size. It's not one trade. One trade is not material in the scheme of things. It's a sequence of trades. That's kind of how it works. Okay. So let's see. Other brother, I don't think like that. I don't know what it's going to do. In fact, once we get to Fed time, it's really nothing to do. So we'll be in, the market will thin out, and it's not a tradable event I don't believe for regular retail traders, unless you have a substantial amount of experience, and it's actually an isolated process, at least it is for me, versus the auction. An FOMC, when you have an input like that, that is major across all financial asset classes, it's a disruptor. So it does not auction. It disrupts the auction, and then the market, depending on what, how it reacts to it, has to reprice for the new input, and then the auction can continue. But along the way, when that input happens, it's a disruptor. So it's, to me, the best thing to do for retail traders not participate. But then again, if you have a trade plan for it, then that's your thing, So this trade failed. Now, so the trade failed, so I have another trade. I'm going, okay, we couldn't mean revert when we had the shot, so now we come back, we fail, it becomes a short for me. So we come below, so it becomes a short. So now I'm on the short side. You're going to love this one. And this is the stop pick. This is how it works. Chop, break below. Okay, context. We couldn't get back in. Remember, and write this down. If this, then that. If not, then what? If this, then that. The if this, then that was that first long. And then, then that is go back, potentially mean reversion, get the stops. If not, then what? Then we break back below the first hour's low. Then what? Then the potential to come back and check the overnight volume point of control, which was the ETH's most accepted price. Same behavior that we were, that we did all the way up on the top. It's a high volume node. Remember, this was this is generic. So now I'm just turning the ship around, and I'm looking to go here, overnight volume point of control, the most accepted price in ETH, and yesterday's value area high, which was the reason looking for mean reversion. Okay? That's as logical. Now, whether it works or not, that's a whole different issue, right? That's trading. So here's the setup, and it's not a recommendation. So here's how this works. Chop, chop, chop. Our volume is here in this consolidation, and you can see it here in the profile. Here, you can see it in this little auction, and this is really a micro structure. What it is going, oh, it's on sale. Nah, it's too high. It does this in all fractals. So I'm looking inside of this volume in here. The one up here is looking inside this volume over here. And what this is the chart volume profile. And what it's allowing me to do is isolate the volume for what's on the chart. So I'm interested in the structures, you see, because this is an auction. Remember, you're a shopper. Well, right in here, there was a little battle. Buyers, sellers, buyers, sellers. And it creates the volume. Remember the retail price here. Then the market can move away from it if it thinks the participants, and it's not me, think this price is too high. And then it can the shoppers come back in here. Chop, 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 right? But look where we are. We're under here. So that means things, since, remember, if this, then that. If we didn't get back on the mean reversion train, then what? Then what is potential, once we take out that low, make a new low, pull back, pick the stops, retail trader behavior, write this down, think like a retail trader, don't act like one. Where do they put their stops? Above the initial balance low, right here. Thanks for playing. And then it becomes a short. So that's what this was. Let's look. Here's the target. Here, here. So those were the primary targets. The goal is to scale. You get short in here. Now, I'm not so good. I can't get short here. Why? It's me. But I have the volume right in here. Okay? Break. So this is it. This is a triggering structure. Let's look. Chop, chop. I'm watching. Stop pick. And you see the delta, the selling? So this was buyers with stops. That's not longs. That's stops. And that's where the stop detector I find very useful because I can I don't know what this is, right? I don't know what this is. Are these guys getting long? Well, if I see stops, then I know those are not initiators, though there might be some in there. I know it's most of it potentially are buy stops, not the same animal, but they show up as delta because they're market orders, right? So this is a short. So chop, 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 break high here. Now, so this is a short structure. So let's look, and you'll see. So what's the deal with this? Well, if your stop needs to be here, and if you're like me, you're going to be getting in around here. Because me, I'm not so good at that. I can't pick the high, remember? So then I have to cover my risk. So my risk is from here to here. It's about 3 points, which is my comfort. So I need a 3-point scale, you see?
Caution, lunchtime chop, caution.
So I get my
lunchtime
scale.
chop.
And then this is my target. And I know if it gets inside here, you know, it could go further, but I don't know. But this is my primary target. So everybody's with me, right? So we had the first long, got a scale, and failed. Now, I'm not talking risk management. If you have a process for that, then you would not, you know, you would have a different outcome than me. But I'm only going with what I consider minimum. My stop is back over this high, and it gets taken out. Okay? So risk neutral, that's 2 scratches. And the trade is over. Okay? Does everybody see those 2? Now this is pre-FOMC, you know. Ned, it's not a neutral day unless I missed something. At least not yet, I don't think. We didn't take out the high yet, did we? I'm not looking. Nope. Where are we? I'm looking at the NQ. I'm not even looking at the ES. I'm delirious. Okay. So that is what I have to share with you today. Now, so we had the long at the IB, then we had the short off the IB. Both of those got scales and both of them failed. We come back in, and I wasn't looking at this one, we have the IBF again. And that one is getting the target. Let me go look at it and show it to you as long as it happened. Now, I did not observe this trade because I wasn't watching. Okay, but I want you to see it because it's the same trade.
Absorption ES buyers at 3,700.
So you know what the way this works? It's a mean reversion trade, and you know how I feel about mean reversion. I underline and accentuate the mean because it's hard to find outside edges. But I was using context. Remember, for me, and it's just my approach, this is my primary chassis, and it's in multiple time frames. So this is the developing daily time frame, but I'm aware of the ETH, right? That's my most recent auction, yesterday's RTH, and the other aspect is both days overlap, so that's kind of a higher intermediate time frame. So it's kind of, that's the fractal aspect. But for me, and again, it's just one way to look at all this, is I'm using the micro time frame to attempt to get in alignment, because in the micro time frame I have a better shot at staying in risk parameters, you know, that are, let's just say, retail trader oriented. Now, whether you want to keep your stops way outside or whatever you do, that's subject to a trade plan and you vetting metrics. What I find is, for me, again, only me personally, and it's not a recommendation, is that it's structural. If a trade fails, I don't know why I'd want to have it, you know. Because if I get picked off and then the trade sets up again, and if it's just a matter of a random rotation, and all of this is random in many ways, then I'll go back in on the trade. So we had this trade again. So let's go take a look at it. And I think it was here. So let's go look. So long. Trade didn't get there, comes back in, chop, chop, chop. So now this is a long again. So let's see if we can, I want to look and see how this works for you. Yeah. Now, this is up to you, you know. And you could see it's kind of flip-flopping. I feel like a flounder that got dropped on the deck, you know, because it was a long, then it was a short. The long, both of them scaled. So the risk management, I think, is pretty good, you know, because that's job number one. Write this down. Get risk neutral. And you need to get the scale, otherwise not so much. But the trade is still potentially mean reversion for all the reasons. And the thing is, we don't know. If we fall back out, we can hit this. And if we come back in, then we can do this. And it's if this, then that. If not, then what? So with this one, so this one didn't get, you know, it scratched. We come back in,
Short 2P.
and now we have this. Now let me take you back so you can kind of see what it looks like. And this is not easy. I'm not saying, you know, and these are not trade recommendations. It's oscillating in here. Chop, chop. Okay. I have this volume here. Let me show it to you. A consolidation under this IB, right? So let's look. This is an auction, right? Chop, chop, chop.
HVN.
I call it chop, chop, right? Because it's a auction. And the real term for auction, and it looks like this, you know, by too low, what it means is the buyers like this, which, you know, that's life, right? That was our short. We don't know it at the time. And here the seller said too high. And it creates, remember, retail trader, where the interaction of price and volume is located right here. Now at the time, you don't know, you know, because we're sitting short, remember? So until it breaks up out of this consolidation, it's still a short. But the volume is here. So the assumption at the time is we can pull back to the volume and then continue down. But so it's if this, then that. If not, then what? So let's look. Boom, it breaks above. That's why the trade was over. Right? See, this is your structure on that short. This is right. Bang. Scale. Bang, breaks above. So now this becomes a long triggering structure. So now, and again, you know, it's like, I don't know. So here we have a new structure right in here. Now we're auctioning above this volume, and this is the key right here. Now I understand this is minutia. I don't anticipate you're gonna go, this is crazy, or I don't know. And I'm gonna tell you, I don't know either. Well, all I can do is read it and try to interpret it. And like everybody else, I get it wrong all the time. You know, that's trading, you know. But I'm attempting to read what the participants are saying. It's not what I think. I took a long, I got a scale, I scratched. I took the short, I got a scale, I scratched. So I know there's kind of a conflict or a fight going on. I still know the market's short, and I know if I can get back inside, my trade, which is mean reversion, is still on the table. I just don't know, right? So I don't know. Now, what do I see here? So I rejected this. I tested the volume. This is my heads up. I cannot initiate here because, you know, I'm looking for the short, right? So the short is, I think, was over here. No love. Rejected it. Now I'm coming back from the other side. I can't sell it. I don't know what to do, right? Except I still have the potential now for all the shorts that are in here to get squeezed, which is the mean reversion trade. So I just hope you see. So here I come back above the IB. This is my IBF again. Right here, the stop has to be under here. So long, and the stop has to be under here. Or long, so you'll be long in here. Kind of back where we were before. But now you have structure and you're hiding under here. So now, what's the job? Scale, and where's the targets? VWAP, mid, that why? Retail trader behavior stops. It's nasty, that's trading, and this is your target. Right here. Does anybody have a question?
ES, long impulse. ES, long impulse. Check context. Check context.
So, you know, what can I tell you? Life in the fast lane, it's just the way it is, you know. You know, Jenny, the thing, Power, I don't know if you're thinking right or wrong. It's a function of statistics. You know, if you want to run three lot, that's up to you, you know. But you got to look at it if you take the full stop, how does that work against running a three lot and scaling the first two? You know, the only way you do that is you keep metrics. I personally don't have an opinion. It's not for me to have one because it's really psychological. You know, how do you lay out a sequence? For example, if you're running a three lot, now you've got more risk, right? So your scale, depending how you portion out the scaling, what is the probabilities of your scales and the targets? I know, or I don't know, but let's just say the potential in this setup, if we want to even call it that, and I'm not even saying, it's just observation. And I have these observations pinned to the top of the Bookmap Discord Traders Lab, and everybody is welcome to download their PDFs. They have all kinds of examples of this phenomena or behavior, and this is based on auction behavior and retail trader behavior. So there's a consistent process involved here. Whether anything works is statistical, you know, because that's trading, and we really need statistics, I believe, in order to dance with the market, because all these trades are random, right? It's just what happens over a large sample size, not what happens in the micro, you know, in the short term, because you can be doing trades that, you know, have a positive expectancy, and there's days when you do those trades and you want to hit yourself with a 2x4, but it has nothing to do with you. It really just has to do with the random distribution of outcomes. Hard for us to take because of our emotional attachment to being right and all the other, and our attachment to dollars, you know. But that's the real world of trading, and it's a different mindset. So this is the long. You get your scale. This is the target here, you know. And this shifted here. Otherwise, this would be the target. But because it's shifted, then we have, so you guys understand what this is. This is a distribution, this whole thing here. This is where, so what we did this morning, we auctioned this, remember? That's what created this high volume node, which is represented by this here. This was the volume point of control earlier. And we labeled that. Come on. TB, let's go. And we call that a variable high volume node. That's what I call it. I didn't know what to call it, so I made that up. Because I want to track, and what it does, it just helps me see where the market at some point said this is fair. This is that same auction I'm talking about. It's on sale, it's too high. It's on sale, it's too high. It's on sale, it's too high. I'm not paying this. Gee, I'm gonna buy 3. I'm not paying this. Let's do retail over here. Interaction of price and volume. Everybody's happy until we change our mind and we say, I'm going to come down here. What does the market have the potential to do? It may never come back here. It may only come up into this area where it separates for stops, or it may come back and check this price. Again, I don't know. So I don't, you know, the fact I don't know is okay, because I never know anyway. Here's what I do know: retail trader behavior. Think like a retail trader, don't act like one. So what do retail traders do? Think about it. Run their stops behind the mid and the VWAP and sell the mid and the VWAP. So where's my target? Ahead of their potential behavior. So let's look. I don't know what happened here because I'm paying attention. See this? You see what that is right there? First of all, our target is in front of this, right? So done. This is retail trader behavior. See these guys? Remember what we used to do? When I say we, it's me too. We'd say, oh, it's coming to the VWAP. That's my setup. And it might be. I don't know. Right? So I don't know. And see, the point is, I know I don't know. So I don't, you know, but I know their behavior. So let's look. You got iceberg selling the VWAP. Everybody knows about the VWAP. It's the most unkept secret on the planet. And we do have a setup, by the way. which is not material in this context, called VWAP to VPOP, but that's a different conversation. You can see that one in the downloads. But in this context, it's not on the table because we are in balance. So where's the next target? Here. Now I'm done. I don't care. And the reason, the point is don't care, because we could have just come up into here and then come back to here. I mean, and again, I know I don't know. So I take what I consider primary targets. So this is the next target. And this is the next target in this observation that we're sharing. There's 3 targets in the IBF. I don't necessarily take the third one unless I'm in the mood. And I'm more interested in high probability, if there is such a thing in trading. And the high probability is retail trader behavior. So it's VWAP, mid, and this is the long ball. This is what I consider the outside edge. It's a developing value area, and it's in alignment with the variable high volume node, price check in aisle 3. This is the next target area. Remember, area. So if I'm up here and I see a sell trigger, I could be out of it up here. This would be if you were running 3. Okay, not a recommendation, just giving you a sense. Everybody understand the IBF? That's right, Jim. You're not. Jim is saying with the 3 lot, you're not risk neutral if you scale out 1 at 1R. No, you're not. You have to have if you're taking 1 off with 3, so let's just say you're risking 9 points on a 3 lot, you really need to get something, close to 9 to get neutral, or you take 1 off at maybe 4, take another 1 off, and you go to a target, or you stretch for the next probability. That's something that is metric driven. I am really showing behavior. I think what everyone, and this is where trade plan comes in, it's a personal thing, and it's really become statistical. It's not anything more. If I can share with you, my objective with the Trader Lab was to kind of give you an idea how to read it. Market mechanics, potential behaviors, triggering mechanisms, and then overlapping multiple time frames. That was the purpose of the Trader Lab. The other part of the Trader Lab is the collective interaction of our participants to research these things and to come up with statistics and ideas on some of the things, as you mentioned, how do you manage the trade and the risk on if you're running a sequence of like a 3 or 4 lot, or more. And a lot of that's a function of range and time frame. So there's a number of elements. So I kind of think of it as I'm kind of working the minimum, and that's why I kind of came up with the idea of a 2 lot, and so that newer traders would have a basis to build something on. So I'm kind of attempting to give a foundation, share a foundation anyway. And it's not a recommendation, and this is for everybody. This is not a recommendation of how anybody should do anything. But if you can understand aspects of market behavior and see some tools that might differentiate, and some thinking that might help you differentiate your results from other retail traders, that may be a benefit to the trading community. But then we all, each individual has to create a trade plan, and that should be driven on statistics. So for me, I'm really looking at it as a minimum. What is the minimum configuration? And that's kind of how I look at it. So that's just me. And I hope that's it. But I can't go beyond that, because then everything else is kind of a subject to the individual's context, how they play. So for me, the minimum structure, this is the target, next target, as you know. The minimum configuration is really a 2 lot. Because it's like building blocks. So if you configure risk neutral first, your first contract buys you the ticket to ride, and then it's the target, and what target? Then you need statistics. So you would, all these IBFs, you can see why if you're running 2 reasonable targets, so you have a risk reward ratio that justifies taking the risk. and you can get risk neutral. So we had 2 trades earlier, both of them got taken out, assuming you did nothing to manage the trade and they scratched. For me, that's a winning trade. You know, because what I got was the opportunity to interact with, let's say, opportunity in the market, and I bought my ticket, I paid for my ticket, and here's the target. See it here. So in the IBF, there's 3 targets really, and it depends on the sequence, whatever comes first. So when this was put on, VWAP, mid, and the VWAP and mid, I think they're overlapping, aren't they? Yeah, that's balance, by the way. Write that down, guys. When your VWAP and mid are aligned, that is often an indication of balance. Balance is another term for two-way trade, 2 sides, okay? So 2 sides are active today. You know, the higher time frame is kind of in park. They're already in their positions. We're waiting on the Fed, right? And this is just the volume's gonna die out and we're gonna hang out. But we can still see auction market theory on display here. So this is the auction. The developing value area high and the developing value area low. Remember, value area. Yesterday's value area, 70% of the volume. That's why I was on the short to come back to check this, which, you know, didn't happen. Okay. Now we come back inside, which was the long off of here. Now this is the developing value area. In other words, intraday, this is developing. It's not fixed, right? It's moving around. 70% of the volume so far today is in the here. Developing value area high, developing value area low. And inside of this is what's considered fair. Well, if this is unfair down here, and we didn't get here, then maybe we're going to revert. And if we come back here, which is the long, then we have the potential to come all the way back here. And then this here is our most, so we have this as a developing level, 70% of the volume, and it tapers going up, so there's less volume. And this is an artifact. So this is a price check in aisle 3, coming back to these retail guys, right? Does it make sense? Can you see the pieces? And this is the target. I think that's pretty good. What do you guys think? Daryl, the 3 targets are just a potential. You know, the thing is, and everybody should always remember, we know we don't know. So, you know, for me, if I'm running the 2s, I'm done here. Because we have no idea if it'll get to the next. I mean, this is the random distribution of outcomes, right? I have alignment, though. This, and we know about price check in aisle 3, and this. If you guys download the PDFs, it's called the IBF, and I think, and I've got a lot of examples of them. They work, by the way, from both sides. I mean, and if you have range extension, which means take out the IB high, take out the IB low, you get IBFs coming and going. You can be doing it from the bottom up, and if we take out the high of the day after the first hour, you can be, and assuming we're in balance, there's, remember, context, most confusing thing in this, I think, then you would be short coming back inside. It actually can come from both sides. So it's really an interesting trade. But it's not the easiest thing in the world because it's counter trend. I mean, it's a mean reversion, which is kind of counter trend. So it's an outside in versus inside out trade. And I think it's a harder trade because I just think if we see the market going down, the last thing many of us think about is trying to fade it, you know? So, you know, it's different. It might not be the first thing you want to play with, but you can get examples of this and descriptions of it if you go to the Bookmap. I never can remember how to say this. The Bookmap Discord chat room, and go to the Traders Lab chat, and there's a bunch of PDFs pinned up there, plus a introductory video that kind of goes over, or a webinar, I should say, that goes over auction market theory, volume profile, and has examples of some of this, you know, so you can kind of see it. But if you come here every day, you'll see it in real time. We haven't had an IBF, I don't think, lately, so I wanted to focus on these today. Now, there were other trades today, but there's no point. I just want to show you something specific. And I didn't know it was going to set up again the third time and do its thing. That's the random idea of trading, because we don't know. So it did its thing, which is kind of nice, But in the meantime, we had 2 scratches, and this one got to target. So I'm considering that a victory. Maybe. Any questions on this? Well, power, you'd be, if you're running, taking 2 off and then holding 1, but what about your risk? You have triple the risk. How does that work? You see? That's the part that, and I'm not saying it doesn't work. Just do the statistics and just show it to yourself,
DHVN.
Yeah, Jenny, it's, this is really just, I think, gives a lot of insight on how to understand market mechanics. We all grow up on indicators, and you don't learn anything off an indicator. You're kind of, well, first of all, it's backwards looking, so it's like driving down the expressway, or we call them a turnpike in the old days, at 80 miles an hour, being on the Autobahn, driving, looking through your rearview mirror. I don't think that's, at least for me, that doesn't work so good. So with this, I can look at the behavior and understand market behavior. It's market mechanics, it's not indicators, in my opinion. So I'm just really using market mechanics and structure. All the structures we see here in the behavior, which we can see with some of these tools, this is stops, this behavior, we can use this if we understand what creates it, and that's the market mechanics. We can also use the market mechanics to see potential triggering structures based on, and that's the thing about understanding auction market theory and consolidations, and then we're looking for behavior. It's just a confluence of pieces, and then we take our risk and we, things work or they don't. You take a stop and it's a trade. This is what trading is, at least as far as what I've come to, accept. And randomness is part of trading, because you don't know. So that's why you got to keep statistics, trade journal, things of that nature. Now, do you notice what we're doing here, by the way? So what is this potentially? Back in. Where? Mean reversion. Not a recommendation, but you can see it, right? See? Where'd we go? Here. Chop, chop. Microstructure, potential short, right here. Where to? Here. And I'm not even, but you guys understand this, right? I mean, if you don't, I understand you don't understand, but do you understand it? Right here. What this all means. Let's put the pieces together. We're in balance, 2-sided. We came back in, mean reversion. It's to squeeze the material. This is a primary objective. See the retail behavior? We also have a setup which is not qualified VWAP to VPOC. Why? The next target in the IBF is this, and because we had this, see, I'm putting pieces together, price check in aisle 3. Remember in the supermarket, right? So what do? Chop, chop, chop. This is our trigger structure. Break high, target, isn't that interesting? Close to the VHVN. Remember, this is trading, there's no precision. It's like horseshoes and hand grenades. Break low, trigger, pull back to where? The structure. Short, target, here. I don't know. Is that, and then what? Here. Why? Retail trader behavior. We're taking advantage of their behavior. Let's see if it gets to the next target. Now we're going to go into Fed time, so we're going to be in park here. We'll be chatting and visiting. We'll be having a pina colada together, or margaritas, whatever your thing is. For me, it'll be ice water. But can you see this? Does everybody see what this is? Now, I know we haven't discussed this, but I want you to think like in the auction. We came up, This is our recent price. Price check in aisle 3. And here's what this says. This was the fair price. We moved away from it. The volume now took place here. The volume point of control shifts down. It says at the moment this is too high. That's what the market is speaking. Now remember, the market can come back and revisit a price that it liked before and go, is this still too high? And what it did here, it came up to our parameters. It came into what's called that low volume node, is the outside edge. So this is all this alignment, right? We have a triggering structure. Then what? Where are the stops?
Pending VPOC alert.
Here, what's mean reversion? Mean reversion is back to the retail price. Then what? Where are the stops? Here. That's this trade from, and you'd be in here, you know? Doable if it fits your risk plan. Scale, helmet. And we could, now you got stops under here, you got the stops under the IB. Think like a retail trader. So this is the next target. Are you guys following?
ES, pending VPOC alert. ES, pending VPOC alert.
Yeah, Jim, you know what it is? It's understanding what might happen in the area. There's no precision. It's just a matter of watching it. The thing with the 3-lot, you know, we're talking about stats. That's really the hardest part, I think, of doing this is the patience to go and accumulate the data. Because the thing is, to develop confidence, if you don't have statistics, you're always going to be changing it. So the statistics, I always use an analogy, and I apologize if you've heard it a bazillion times, but I know there's many of you that kind of are transient. You know, you come in, you hang out, you visit, you leave, you know, whatever, which is all fine. But the thing is that the statistics are important. Think like a casino. I mean, let's just think like a casino for a moment. And I always use this analogy, blackjack. And I'm making numbers up, so don't come after me with the machete. Let's say they get 6% net over the year. What they don't know is the distribution of the iterations of individual hands that are played at the blackjack table or the size of the bets, things of that nature. So there's going to be people who come in there, bring the suitcase with 100,000 and leave it there. That's a good day for them. There's other people who come in and walk out with 100,000. Not so good. It's a random distribution. But because they know at the end of the year they get 6%, they don't go change the game every time that somebody walks out with a big win. Because they know over a large sample size it's just part of a distribution. In trading, we're in the same business. We need an edge. So you need to determine how you get that edge. And it really doesn't matter as long as you have the metrics. I mean, we all, you know, you may think that you need to trade a 3-lot, 4-lot, 5-lot, whatever it is. How about you? Maybe you don't. Maybe you just need a 2-lot. And if you have high metrics based on a plan, you trade 2 and 2, 3 and 3, 4 and 4, 5 and 5. I'm not saying that should be your plan. I'm saying is if you have, however you can slice and dice the metrics. Now, the thing to understand about this process, it works in all time frames. You know, you remember, and I'm just going to, I don't know if I have this chart available. I want to see if I could show you something. I just want to show you a higher time frame of the same process.
Honor yourself.
Hope this works and that I don't make trouble. Because if I try to open something up here, you know, the thing can really get nasty. Yeah, it looks good. Here, let me turn this around. So you know this trade is, you know, now the short, and we're going back to the IB, right? We don't have to look at that for a moment. I just want to show you. Well, that was an improvement. Let's try that again. I'm getting there. Now this is the same process in a higher time frame. This was last Thursday. If you guys remember, this is higher time frame. Same process. This is just like your price check in aisle 3 that we just looked at in the developing time frame. Remember the VHVN we were just looking at? This is a consolidation of all these days before we broke out on Thursday. Okay? We were leaning against this in the higher time frame for selling. There was no longs. If you guys remember, you were following the stream last Thursday. This was the shorts. Short, short, short. And you remember, I was trying to get outside. I think I had 2 stops, you know, in theory, because we were just narrating. They weren't, no, they're never, we don't call trades here. But this was where we were shorting. And then we were selling. It was rotational until it broke out. Once it broke out, then we were short around 85 here to here, all the way. Same process to a high volume node. This is what I call a micro composite volume point of control. This is the high volume in these consolidations. All we're doing is the same thing in fractals, which means micro time frame with those little consolidations with the little nub of high volume. This is the same process. So we are trading inside higher time frames. So for those of you who want a higher time frame, you still got to initiate and lean on something. So all we're doing is attempting to trade, and this is what I call fractals, trading inside out. So I just want you to see it's the same process. So from here to here. Or in mean reversion, if we're down here, if it was like today, it was the return to it. Or in this case, the return to it. In this case, the return to it. The return to it. Now there's more here because I haven't filtered this one out to get the primary ones like this one is. It is now, but it wasn't at the time because I was working from this to this. Anyway, I just want to show you this is the world of fractal. You know, think of those little Russian dolls. You know, that's kind of what this is in many ways. So, see, we hit our target. Price check, too high. If this, then that. If not, then what? If we don't got here, what is it saying? Too high. Where are retail stops? The longs have their stops under here. That's why this is the target. And then after that, doesn't matter. It can still go down. It can do anything. Don't forget, we have FOMC, so I think the market's going to pretty much get tired here. But there's stops under here. So this is why this is the next target. Is everybody tracking? VHVN is just like that VPOC I showed you in the higher time frame. Okay? That's what this is in a micro time frame. Same thing as that other structure I just showed you. Let me just show you again. That VHVN is like this, except here, this is an intermediate time frame. So that's why this process, I think, is very learnable and transportable into different time frames. This is like that other one. This is the current volume point of control. This is considered the fairest price. But we are rotating around it. Too high. Where's the fuel? Here. Retail trader behavior. So I trade into with these guys because I can rely on them. And I want to try to use where their stops are as targets. So I want to be on the other side. Does that make sense? Just me. Yeah, I like that handle, Pea Shooter. Pea Shooter, the 2 lot has been great strategy, works for your plan in your brain. Yeah, I get your heart rate. You know, the point of the scale, I have found is the psychology around it besides the risk management, you know, because it allows you, in my opinion, to calm. And when you don't, if you're trading a 1 lot, I think you're always on the edge of your seat and your FOMO and your fear is triggered continually, you know, the fight or flight. So how do you calm that noise down? Well, you know, the scale really psychologically, I think it's pretty important. So what's the price? Is it worth paying a full stop in exchange for the ability to calm yourself and hold the trade through counter rotations to your potential target? Kind of a question. But I think the psychological noise, that roaring in your head that says, move your stop, bail out, I'm going to get, all that crazy. And understand where the crazy comes from. This is the next target. We just got it. Where the crazy comes from is that you're wired, not to step in front of the bus. Your brain doesn't know that this is intentional. It's still going to trigger those chemicals that swamp your logic, right? So this trade is done unless you're trading more contracts. I'm okay with this one. What about you? Right? Wasn't this our entry up here? Right? Chop, 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 break high, break low, trigger, retracement to the micro high volume node right there. See? See it? That's your short. Bang. Stop up here. Once we break down, you can move your stop if you want, or just tuck it, to wherever you want it to go, up to you. And now here. If you're running more, we're back to this. Same trade we were on before, remember? We were trying to get to the overnight volume point of control. It's like turning the oil tanker around and trading the context. And the thing about trading like this is we don't know. So I'm okay with not knowing. I know I don't know. So I've accepted that. I get annoyed. I have emotional responses when I, take a stop, and I do, or I get a scale and then the trade comes out and takes me out. And my job is to keep taking the trades as long as it appears to me that I'm still in alignment. The thing about trading is rotations are random. It's kind of like if you step away from it, it looks very logical. But what about this stuff or this? Why this? And this is the same short. If you didn't take this right here, let me get back here, is the same short we tried earlier to go for here. You see? Can you see? It's a process in randomness. So now, if you're running, so for me, the primary trade is to here because of stops. But it's also the same setup that we took the short that didn't get to the target the first time around. Remember? It was this one over here, I think, right? Didn't get there. Well, now it's the same trade. From here back to here. Rinse, repeat. It's just, that's just the way it works. I don't know. Can you guys see what's going on here? Does it make some sense? Process and randomness. Well, Emil, it is about randomness. It really is. And, you guys, I hope a lot of you have taken advantage of the free PDF downloads of all this stuff over in the Discord Bookmap Traders Lab, not to mention the free education on stocks, options, using different processes, using this tool of order flow and, trying to understand, looking inside the behavior of the participants, I think is valuable. It is for me. I never figured out how to read the dome. When I started, they didn't have a dome. When I started, you wrote your ticket, by hand, time-stamped it, picked up the phone, gave the order, time-stamped it again, you got your fill back, time-stamped, there was a big clunk, you put it in and it would stamp the date and the time. That's how it was done, So, repeat, he does a great job.
ES, long 2P, long 2P.
So we are rotating in value. See this? Value area high, value area low. This could be a target, but this is statistically a target. So we'll see if it gets there. Now, if this comes back in, the trade's over, you know. But, let me give you the but. Where's the stops? Under the low. Retail trader behavior. So this is putting this, see, the fact something doesn't happen one time doesn't mean it won't happen the next time. This is the next target. Now, if you're running 2, done. You're running 3, next. Is this logical?
ES, short impulse. ES, short impulse. Check context.
And remember, we don't know. So all you can do is, it's maybe at best, and then a trade management process, because, you know, the last thing I think you want to do is get here, and then have it come all the way back on you. So, but a short from over here, I think this is all doable. I don't, you know, this is, at least for me it is, you know, I don't have a problem with this. In fact, I would be pretty happy with it. And I wouldn't even be upset about what happened before because there were scratches. Well, 2 scratches, you know, a long and a short that paid. And I'm only showing you, what, 4 trades here. And you're seeing them in real time, so this is not hindsight. That's just the way it is. You know, I mean, this is what I consider. This is what I think trading is. I don't know if anybody else has a different viewpoint of it, but this is just kind of what seems to happen. You know. Is everybody with me on this? Okay, everybody kind of see the rationale behind all this? How about you guys in YouTube? Part of the rationale for me is retail trader behavior, you know, kind of what they do, because I need them for the fuel. And I know their behavior. Just think of your behavior, because that's, you know, we all kind of do the same thing, and, you know, at some point. So one of my mantras is, think like a retail trader, don't act like one. So I want to be on the other side of their trades and their behavior, because I need them, you know. I need their stops. So that's what this is. We're seeing sell stops. That's what this is. Sell stops, sell stops. So I want to watch for exhaustion in their stops. That's an indicator to me of behavior. I may want to be watching down in here. See the book? See the algos? And if I see a buy trigger, I might want to bail out, subject to your trade plan. Watch this right here. See this? Let's watch this. This could be a trigger. And I don't have an issue if I get out here and then it goes to here. You know, I'm not going to pull the gun out and abuse myself with it. I'm past the point of holding myself to a point of precision, because I've accepted there's no precision. At best, it's maybe. Remember, we didn't hit this. We got close to it. We got here, which is the next target. Well, it could have gone here, and it could have even taken out the high of the day, right? All that is possible. So I know that. Now this could be a reversal right here. I could be out right here and be done with it. It doesn't matter, does it? I mean, would anybody be terribly upset being short from wherever it was? I think it was here. You know, 82, call it, to like 65.
Mark liquidity.
I'm good.
Liquidity.
Yeah, repeat if you can't see the chart. Let me give you the YouTube link. The stream, you know, is real time in Discord, but it fills up. We got room for 100 in there. So if you're in the stream, come on over to YouTube. There's a 15-second delay, and I invite all of you over in YouTube to come over to the Bookmap Discord Trader Lab chat, because it's real time over there, and there's a huge well, let's just say a large crew of traders with all kinds of experience. And the idea behind it, when I thought about doing this, was that we have a collective and that we can, leverage, right? Leverage our collective experiences, data mining, all that other stuff for the benefit of everybody. The only thing is, if you have an opinion, it needs to be based on some kind of material fact versus I just believe such and such based on, nothing. Because it's about real trading. The real world of trading. And we all face the same difficulties and challenges. Nobody's immune from this. There's no exception. We all go through the same track, and we all create beliefs that we bring from the outside world to trading that don't fit in trading. And we don't know that because nobody tells us, Nobody shares the real world of trading. We get a piece of software, we open it up, they got all these indicators. Oh my goodness, let me try this one. Oh my, let me put this and this one, the second one. Oh gee, I'll do this indicator in the 15-minute chart, and I'll do this one in the 5-minute. I'll use the move, all that, right? You guys all know that. And I always ask, why do they have 80 indicators in there? Wouldn't just one or two good ones work? So we go down these rabbit holes of trying to create and we're ultimately attempting to curve fit something in a plug and play environment with nothing other than a belief that we'll find the right one or the right combination. And the part that really twists your brain is these things can work intermittently, or combinations may work, and then they don't work. And then you go on to the next idea and the next idea. Well, along the way, what's happening is you're not understanding or ever learning about market mechanics and the true nature of a market, because those indicators don't give you that. It's kind of like training wheels on a bicycle that you never get to take off, and you never learn to balance on a bike because you're always changing those little wheels. You're never learning the market, and nobody tells you that. Now, I'm not saying it's not right for you. I'm saying it wasn't right for me, and I think a lot of retail traders go down the rabbit hole, because you're constantly repeating this search, which really doesn't have much of an answer, I don't think. I mean, I'm sure it works for some, but most of the traders I talk to, they're, I would say a lot of them aren't doing that. The other element of these inconsistent processes is you can't quantify them, so you don't know what you got, and you don't know when it changes. I mean, just because it's random. If you watch my video or webinar that's on the top of the Bookmap Discord Trader Lab chat, it's pinned up there along with all those PDFs you can download, you'll kind of get an idea, of kind of what that is. I did system design. I used to be a swing trader, a trend follower. So it's not like I haven't done it, and I don't do it anymore like that. But I didn't know, I didn't get introduced to market profile until 1985. And even then I couldn't figure it out. So, and over time, what happened was I, worked at it, and started recognizing behaviors and adapted my viewpoint of it, and developed a market understanding that was not like based on any indicators. So I don't use any indicators. I can kind of see what's going on right here. So that frees me up. So I don't have conflict. I'm just talking about me, I'm not saying it's what anybody should do, but I thought there might be some value in me sharing some ideas with the trading community, and then it's up to each of you to dig into it, if it resonates with you. Andrew, I don't know about, I don't think about IB extensions or any of that. I'm not, I kind of, I it's almost like Fibonacci, you know, and that's pretty much what a lot of these extensions are. You know, fib extensions, retracements, other than 50% retracement in a trending market first time, I don't even think about those. I don't think about fibs, and it isn't that I haven't. I want you to know, been there, done that. Elliott wave, been there, done that. Harmonic cycles, Fibonacci cycles, time cycles, projections, harmonics. I can go on and on. I can go on so long I can't remember how much stuff, because it's not part of my thinking anymore. But I've done a lot of work over the years, and I'm just saying is I find simple. So the more I add into my charts, because I used to think more gave me more information, and all it did was create for me, it took me out of the flow of the market and what the participants were saying regarding behavior and value, and my mind would fixate on a number. The participants don't care. You know, it's like fib, you know. Well, is a 62% retracement? Is a 78% retracement? Is a 1.25% extension or 200? What is it? I don't know. Does it matter? I don't think so. At least it doesn't for me. Why? Because if I have that statistic, then I'm not managing my trade based on the behavior. So for me, I'm out of this trade. Now, here's the other thing. It could come back here, right here, pick the stops, and now continue down. And that's a potential setup for me. Now, or I just sit here because it's Fed day and I go, you know, I got less than an hour. Do I care? That's up to you. This is a short. But I've got this structure right here that we rejected. So this is my obstacle, right? The volume right in here. So if I'm getting short, where am I going to get short? 67, and I got to be scaled out at 65. You see, that's just too much, you know. 67 and a stop over 70. 3-point risk, and I only got room to here, which would be my scale. I can't do it, right? Because of this. Because what happened here? We had chop, chop, break low, chop, chop, break high. The volume in here was too low. See where we came? I can't take the short. But you can see the structure. This is why I narrate. By the way, I can't chew gum and walk at the same time, so I can't trade and, you know, do this. But if this is a trade for me, except it doesn't qualify because of this. I can't risk 3 and scale 2, even if it goes on to this target. Now, if I had a runner, we were talking about it, right? I said I'd be out here because I'm not going to risk giving all this back to get here. You see, I'm good with this because I got short. Where was it? It was up here, right? Somewhere, right? 82, let's assume 82. You know, I mean, by short, we narrated and observed. It's not, never, you know, we don't call trades here. But this, I want you to see structure. Part of learning the auction, it's a different way to think about it, is what creates this. Why? This is auction market theory. Remember, too low, too high, too low, too high. It's a consolidation. Inside of here was the volume. Now I'm going to show it to you in the microstructure. I just want you to see how this happened. Whoop, get back here.
IB alert. IB alert.
Isn't it interesting now? It's coming back up. See how structural it was? This right here, this is your auction. Right in here is your shoppers. I'm not paying that up here at the top. I'm not paying that. Down here, oh, that's wonderful. I like that. I'm not paying that. Boom. The intersection of price and volume creates the high volume node. It's right there in the middle of this consolidation. And you can see the same thing over here. When we move away from it, it is saying at the moment this is too low. Now the market can always come back. Or, you know, we got the Fed, all bets are off. All this structure and everything goes out the window because now we're going to have a fundamental event and it disrupts the auction. You know, so, but I'm just saying it speaks. So I'm reading the auction. That's my primary tool, right? And I'm reading this in a microstructure. Remember, I go down as low as I can because this process is generic. When we went up to that developing value area high, it's the same as where 70% of the volume is in this little microstructure. Now, I'm not going to measure it, but I know what's going on in here. And the high volume is that retail price. And you can see it right in here. When we move away, it's saying in a microstructure that's too low.
Mark liquidity.
So that's why I was out of the
IB alert.
short.
IB
Now let's talk about the potential short from the
Unfortunately,
IB.
3,769 point.
And this is the beauty of auction market theory. Where's the volume? It's here. Pullback. This is a potential short that doesn't qualify, so there's no short. Where does it come back? It tests the top of this volume. Comes back to this, the outside edge of this consolidation, where now this volume is located, which is here, right in there. So that volume, which is approximately where you see a little white line, is across there. So, too low. Price check. Reversal. So that's why there was no short here, because of that. If this, then that. If not, then what? If this is too low and we break back up, then we have the potential to do a price check in aisle 3 in the micro aisle, which is what this is. If you were short here, which under certain circumstances might be appropriate, this is your obstacle right here. Can't do it. Does that make sense? You got to think like that, in my opinion. One way to look at it, anyway. Are you guys tracking? We're in balance, futuristic. Yeah, good question. Yeah, balance. So this is mean reversion again. We can come back here. It's outside in, at the moment. But there's not, again, nothing to do. This is like nada, So we're going to put the vehicle in park, and we're going to sit on the side of the road. Let's all have a picnic. What do you think? And now I'll still talk about microstructure, because this is really what you need to practice, I think, is an understanding. You're not trading in the middle of any, this is not like, you're going to see trigger structures everywhere. Like this is a short trigger structure, right? But that doesn't mean you initiate it, because you have to kind of go up to higher time frames and look at the structure you're overlaying the microstructure on. And this is something that so you have to think. It's like a vertical, multi-dimensional chess game, I think, And the market speaks. So what I'm attempting to share with you is a way to translate the language, or it's like music, or I think of it sometimes as dancing, like you're reading your partner, and you kind of get in alignment,
Yes.
or sheet music, because this market is continually speaking, like this, downside rotation somewhere.
IB
So
alert.
you can once you get used to understanding this, it's almost simple. What is not simple is what's going to happen next. The rotations are random. So this is a short, right? Except, where are we? Nowhere. So there's no trade. But if you can start recognize the point of what I'm trying to make in this, if you can translate what you're seeing,
IB alert. IB alert.
then when it shows up at a location, you have the tools to participate, assuming, underlined, you have a vetted trade plan, and statistically you have an edge at a location. Then the trigger helps you get in the trade and know where it fails, because you have a structure. That's kind of part of these pieces, So I can see there's a counter rotation. There's no trade. Why? We're in the middle, it's like running across the street on Park Avenue during rush hour in Manhattan. No.
IB alert.
And it could do anything here. But we did see a short trigger, but not a setup. Does that make sense? Other brother, it's fractal, so this is my primary chassis. This is the developing, and that's why it's called session volume profile. This is all the volume that's traded today. It resets every day, RTH open. So this is, the session. So it shows me these distributions, in other words, and a distribution is just so you understand what they are. It's a consolidations. Like this up here was a consolidation. We had the high price, right? We fell out of it, saying, yeah, too high, we're not paying that. We even had a trade that went back and checked it, right up here, too high. Now we're back in this distribution. That's what we're trading right now. This is now the fair price. The volume point of controls right here. So that means this is retail. Down here at the moment is where it's on sale, and it's mean reversion, potential to come back here. So you could be this, and we just saw a microstructure that said a short, right? Well, but the deal here is it's mean reversion, so potentially back here. So what do you do with the selling structure, you see? Nothing. So it's alignment. So where's the buying structure? Here, and what did we do? We pulled back and checked it, held it. What's the potential? Back here. You could, if you can read this, it's almost, and it's a process. For me, it's a logical process, and I think in process. And that's one of the reasons why so many of you in the Trader Lab are able to incorporate this and are getting some benefit from it that is now material, right? Because it's if this, then that, if not, then what? If we don't get to this target, we got close, and we have a buy structure. We come back in, we pick the stops, now theoretically a short, except this. If we come back to this and hold it, then what's the potential? Here. Or not, again. And we have a sell structure. What do? Do you short it or do you ignore it because the context in the developing daily time frame is mean reversion, which means here. Let's watch. If this, then that. If not, then what? What is a little wacky about the whole thing, I think, is alignment and not getting myopic in a micro time frame, but overlaying the micro time frame on the higher time frames, you see. So what and that's when I talk about trading inside out, that I'm attempting to share with you just some ideas. That's all this is on market mechanics and behavior. And then it's up to you to say, okay, what's it saying? What is it saying? Well, our short was fine, and we were going for this until this. Now, there's two ways you trade this thing. For me, out. For you, maybe you hold it, and you get out when it fails to take this out. What's your trade plan? Me? Not so much. Instead, you come back here, watch this. What are you thinking? I don't know. It comes back above, we get the selling trigger, but we're in mean reversion. Where does it pull back? Here, potential long to here,
Yes.
right?
Short 2P.
Or not?
Short 2P.
Can you see why you need to understand the context? And then it's a couple of functions. It's where do you engage with the market? What is the potential? And nobody knows. That part is maybe at best. So there's your stop pick under the IB low. And then you'd be looking at a potential long, and then you'd be going for this. If it doesn't work, it doesn't work. And the thing is, would you have a scale? I don't know. If it fails, you're stopped out. That's it. There's nothing more to do. Let's watch, see what it does. Not trade recommendations. All we're trying to do is observe potential behavior. So let's watch and see if we get the VPOC before we take that stop out, which is the structure. See, this is why it's this. It's not here. Why? Retail trader behavior. Their stops are here. So for me, I got to be behind structure. I don't need a stop down here or down here. Why would I do that? Because it fails here. Here's your test of what? The volume. Look. Let me try to isolate this. I want you to see market structure. If I can get this spread out for you, I want you just to see where the volume is. So this chop, chop, chop in here, see this volume? Where'd we come back? Here. stop pick under the IB. If there's no further selling, then there's this. Or not. No idea. See? So this is, we get below here, chances are this is going south of the border. But the stop cannot go here because that's retail trader behavior. The stop needs, in my opinion, I'm just giving you one way to think of it, needs to be under here where the structure fails. Structure fails, you're out. Thanks for playing. See you later. Mean reversion, back here. Maybe, maybe not. Going into the Fed, everybody's going to lunch. But let's see. Okay? So I see the book, I see this, but they've been pulling, you notice? Let's see if they pull. They pull and these guys come up, it's like the tide, but you don't know. These are algos, right? So they can, if they come down here, they can push it. But where's my primary input? It's the auction, and I don't know with these guys what's going on. This is algos. You look at them and I just sort of go, I don't know. Resting liquidity, I have a different opinion. But this stuff, they're in a different planet than we are.
Mark liquidity.
So let's see. This needs to clear. If they come down, they can push into this. And there's nothing we can do as retail traders. But I do know what created this, and I do know we checked it. So unless this all fails, this is next. Let's watch. I hope you get something out of this, mean reversion. And then, now we're going into Fed, so I don't think much about anything. But if we get here, then the next target would be here. And I am clueless, absolutely. Is everybody tracking?
NQ, sending VPOC alert, long NQ, check context, check context.
This is just, this is just, I'm just trying to share ways to interpret the behavior. And today's not such a good day. At this point, there's really nothing going on. But you can still observe auction principles, and can you build a plan around these behaviors? So there's no indicators for me because I want my mind focused on, I guess what you might call the primary market behavior, which is auction. Because you have to go back to what is the purpose of a financial market. It's to get participants involved on both sides, the buyers and the sellers. So it's where do the sellers sell and where do the buyers buy? Okay, brilliant, you say. Yeah, but isn't that happening in all time frames? So if we can start from the bottom up and understand the higher time frames, we can then try to align. And on the developing daily time frame, once we kind of get the lay of the land and also superimpose that over the ETH and yesterday's RTH, we have some insight to the participant's perception of value or out of value. And then we act accordingly. The target for this VPOC, by the way, is not at, I usually give them a couple ticks. What's my theory? Leave some for the sweeper. But this is mean reversion. Is everybody tracking? Is this useful, I guess, is the real question. Are you getting anything from this? Auto on Bookmap, it's really a way to see inside better. That's how I use it. The order flow, the stops, the icebergs, add another dimension to the participant behavior, and it allows me to isolate volume and structure and more micro, so that's very useful for the way I like to trade, and I think anything you can do that differentiates what you do from what the herd does is gives you an edge. This is our next, right? Mean reversion. So let's see if we get to the next layer. Where's the retail stops? Here, here. So that's the next target. So this is mean reversion, primary targets back here. So you got your scale, you're all happy now, and you're risk neutral. Or you scaled ahead of this, but this is the primary objective. This is where retail traders have their stops. So that's why it's the next target. If this, then that. Where's the stops?
NQ, long impulse.
Here. So this is the next
Long
layer,
impulse.
okay?
Check
And you'd be
context.
done.
Check context.
That's all it is, you know. I think it's okay, you know. It's all right for me, you know. And now this is what the market is offering, you know. We don't know, you know. So you'd be long from here, you know. You'd have a scale, and you'd be going for the next one. You'd be risk neutral. If you want, pull your stop up, you know. Lock in a few donuts. Up to you. So you need a trade management plan. That's an individual thing. But for me, and I'm just telling you me, I see no reason to risk like outside of here. I don't know what that gives you. Because if they took this out, then they're going to take that out. So what do I get for that risk? I'm kind of a risk adverse individual. So I'm always looking at the structure. Because if I'm triggering off a structure, which is right here, you can see this, and now it can do this, come back here. So my stop has to be under here. Now, once we pull out of this whole thing, if you want to trail it, that's good. You need a plan for that, but you might move it here. Last test, of the volume in this structure. Now you're going for this. That's it. Useful? Well, it's just practice, other brother, seeing everything. There's not, if this is, for me, years of research, experience, thought, and what do they say, weeping and gnashing of teeth. No, but, a lot of work. And but it's very logical. It's just the recognition and interpretation. You got to study it to the point where it becomes unconscious competence. Right here, I'm seeing behavior. If I can't get back up there to VWAP, then it's going to rotate down to VPOC. And now I want to see the book come up. That would be nice if those guys push it. Because where's the stops? The algos know where the stops are too. So let's see. Right here, I'm just looking. I'm saying, okay, we can come right back to VPOC now. And it's not that I know what it'll do, because I know I don't know. But I could see the microstructure that says we're going to have a rotation. It may never get to mid in VWAP. And we got a half hour to FOMC, So I don't know. So let's observe the behavior. And it can rotate all the way back down. Remember, this is the market. It can do anything, right? But let's go back to but. But where's the stops? VWAP and mid. That's why it's my target. Not a recommendation, of course, just saying. So let's see what it does. Yeah, other brother, it's just practice time. Yeah, serendipity, it is balance. Because it came back inside. So that creates mean reversion. We are in balance. So that means rotational trading. And it's just us. I don't see really, what do I see here? 499. It's the retail is primarily the ones who are long in this thing at the moment. Everybody's pretty much on the long side here as far as the market goes. But, based on what's going on down here, see, everybody's kind of long. So everybody's long. By everybody, I mean the book, the delta. This I'm measuring but this means nothing for me because I trade the auction. I just have it here. It's a curiosity to me. But I don't look at that and go, well, everybody's long, so I'm not going to get short because that's not my primary input. My primary input is the auction, right? It's my chassis, as I call it. I run my trades in here and then the higher time frames. I trigger and operate in the more micro time frame. See, the high volume is right here, right across here. We need to come out of this high volume or we're going. Now remember, this, it could come right back here and this may never get here, because that's maybe. That's the best you got in trading is, maybe. Stops are here, so that gives me kind of a, I kind of suspect this is more likely than coming all the way down here again, but I don't know. But when I design these things, and it's, I don't take credit for any of this, I'm just saying as I kind of observe, you know, over a lot of time, then I know where stops are, and think about us again, retail traders. What's our experience? Well, I'm going to keep my stop behind the VWAP or the mid. Well, if that's the case and a lot of retail traders are doing that, then I suspect, underline, that we have the potential to get here before we get down here. And again, I don't know. And plus we have the Fed, which is, but that's immaterial. I'm trading the auction at the moment. Does that make sense? Well, Jeremy, I got to say that because I'm not calling trades. You know, yeah, it's not a recommendation. So let's see if we get to the VWAP and mid before the trade goes south of the border.
Short 2P.
Now, again, I'm just trading this auction, or showing, I'm not trading it. Let's just say I'm just sharing some ideas with you. But let's think about retail trader behavior and where their stops are. And are we going to get those guys out before we counter rotate and take the longs out? You see, isn't that the question? So we'll watch and see what happens. We are running it. The clock is running down to FOMC. So, you know, but based on the auction and retail trader behavior, that VWAP and mid is, you know, on the hit parade. And we don't have to get there this rotation or any rotation. So as part of your trade plan, you kind of need to think about, well, what do I do now? Ask yourself, what do I do now? If I'm sitting here long right now, hypothetically speaking, because, you know, we don't know, what would you do? If you don't have the answer, you need to have that answer. And you might also be, I don't do anything because the trade hasn't failed. But then you have to be willing to give this back. How do you feel about that? If you don't want to do that, then you need some process, because we got pretty close. See? That's another question. Write that down. And that's an individual thing. That's your trade plan, you see, how you do that. I still have an open target, but what do I do if it does this and flushes all the way down again? Now, we still have FOMC, but let's leave that out of the equation at the moment. You know, what do you do about this? If you go, I don't know, then you got to kind of figure that out for yourself. I can only my objective is to just bring it so far and then give you some tools. And then if the tools resonate with you, you know, in other words, you can kind of see some value in them. Now, how can you wrap a business plan around the tools? You know, so it's kind of giving you some raw tools that I think are pretty good. And then that's where you have to do the work and create the trade plan. Because it's, you know, location. This is like real estate. Location, location, location. Triggering, risk management, right? In other words, location means where. Of course, you got to know why. And then it's risk management, then trade management, right? Targets, all that. So, and these rotations are random. You know, this whole thing, this stuff, that's random, you know. Didn't quite get there. Well, pretty close. So if there's longs in here, where are their stops? Potentially under here. Remember I said it looks like we're going to have a counter rotation. Where would it go? Potentially back here. Then we might go back up here or not. See, I can think like this. I don't know what it'll do. I do know what it might do. But other than that, I don't know what's going to happen after that. Are we going to take this out and keep going and wipe out the longs? Or is this just a stop pick and then we come back up to the target? Don't know. So that's trading, I guess. Huh? Is everybody with me?
ES, pending VPOC alert. ES, pending.
No, I have no delay. There's a 15-second delay on YouTube.
Pending VPOC alert.
Those of you, by the way, in YouTube, I hope you're getting something out of this, If you are interested, I have about 80 PDFs you can download of examples of these structures, behavior, and also a webinar I did on the kind of the methodology or the process of thought that, talks about auction market theory, the mechanics, and also specific details on some examples. Trend day configuration, and then an example of a trend day configuration that changes into a mean reversion configuration. It's real interesting, I think, because I picked those days because one of the issues with trading, I think, is understanding context and when it changes. Like this example we're discussing here is mean reversion. It's a different context. So it has its own mechanics. Or understanding, I should say, of behaviors, which is why the VWAP and the mid are the target up here. If you understand mean reversion, you would understand why. You would also understand why we just came back here. What is this? You would understand it. You would understand why this is the target. Not saying, and again, it's all random. I have no idea. We fall under here, then these guys are vulnerable down here. Who's vulnerable down? These guys. Are we going to get there? No, I don't know. But that's the trade, right? And then the rest of it is maybe. So let's see how it plays out. Before FOMC, right? The STC? Well, the SVP is the session volume profile. This is taking all the volume that's transacted from RTH open. The CVP, which is I think you're asking about, is the chart volume profile. It lets me look inside whatever volume is visible on the chart. So I can isolate the auction right here. And this is the auction. This here is an auction. Too high, I'm not paying that. Oh, it's on sale. Yeah, it's too high, I'm not going to pay that. Oh, I like this, it's on sale. There, the high volume node, that's in this structure, the fair price, where this volume is right there at the top of the arrow. Well, it acts like a VPOC. Now, in the developing time frame, the whole thing, the high volume is here. This is the retail price. So we can still rotate down to the other side here. And I have no idea. That's the mystery of trading. So this is the target because of stops. If we don't get up there, and this is not the best time, for anything because it's FOMC in 16, whatever, 15 minutes, whatever it is. But that's your target. So let's watch. So it's this in a micro time frame, that high volume is the same as this high volume in a higher time frame. Hope it doesn't confuse you. Probably does. And this up here is the same behavior in this auction up here. This was too high. So we could stay right here or come up here or down here. And it's, and I have no idea. So that's kind of the lay of the land at the moment. That's the fractal nature of this thing. So I don't know. STC, session trade. I don't know what the STC is. I have no idea. This is what I do. I don't, I'm sure there's better ways to do it, but I'm not there yet, This is what I do. It's just, and this is really up to the individual to do research and find a better way. By the way, the purpose of the Trader Lab is a collective of traders. We work together to try to find a better way. That's, we're all kind of doing the same thing, but instead of being, trading is a kind of a lonely sport, It's easy to be isolated because who can you talk to about trading except other traders? I try to talk to my wife about trading. Her eyes glass over and she just looks at me like,
Pending VPOC alert.
and this has been going on for a long time, no doubt, right?
Alert.
That's just the reality. It's isolated.
ES. Pending VPOC alert. ES. Pending VPOC alert.
Yeah, repeat, I am involved with the development at Bookmap on the tools and beta testing, all that kind of stuff,
ES. Pending VPOC alert.
T-Bicky, I have no idea. I can't think like that because it doesn't, I have, I'm clueless. I kind of stay in the state of I know I don't know. And the thing about predicting, I don't know anything about it. I can't. I just try to align myself with what I perceive to be the intent of the participants, and I try to align myself with retail in the sense of what they do and not do what they do.
Pending VPOC alert.
So I don't know if I think this trade is in park and it's probably done, but again, I have no clue. And we have 15 minutes to go for FOMC, there's really no reason to be doing anything in here. But,
Pending VPOC alert.
so, this is where strap your helmet on and, I personally do not get involved. Something like FOMC, it's not that I can't get involved, but it's a different plan. So, I'm not going to discuss it here because if you're not don't have a positive expectancy or a specific trade plan for a fundamental event that is disruptive to, to behavior and can create outsized risk, then there's, you should be a tourist, because it's its own behavior. It's unique.
ES. Pending VPOC alert. ES. Pending VPOC alert.
Yeah, Donald, that's great. Yeah, in Bookmap, they do, I'm extending an invitation to all of you who are in YouTube if you haven't done it. If you go to the bookmap.com website, or even I think at the bottom of the YouTube video where the description is, if you click more, there should be a link to the Discord Bookmap
ES. Pending VPOC alert.
channel, I guess you call it. And in there, there's a lot of free education, options, stocks, using these tools, even crypto options, there's some really good options stuff, based on market maker behavior and hedging. So there's other tools, that are available, and the education and these ideas are free. Even if you're not a Bookmap subscriber, you're all welcome. And if you come to the Trader Lab,
Pending VPOC.
you should download the 80 PDFs I have of examples, of different structures and mechanics and a webinar on understanding volume profile, auction market theory, and how to use some of these tools. It'll just save you a lot of time. And then you can, check it out. We all pay so much for education in our, our travels and our desire to learn. And for many of us, we have not gotten a yield out of that. We also go down all these rabbit holes because there's so much information out on the internet, and whether or not it has value, that's something you have to determine. I have found that when I started in the business, there was no information. We didn't have the internet. We only had a book. You buy a book. My first class was at the Chicago Mercantile Exchange in classical bar charting, and then charts were kept by hand. So I still got my ruler
Pending VPOC alert.
from back when I started.
Pending V pocket alert.
I don't have the pencil though. And every Monday you'd get a chart book. It was almost like, you know how the MLS used to be with real estate? You get a book every Monday and, you know, that kind of thing. Well, it was the same way with the charts. You'd get a book and it would have last week's, and then every day you would add your daily open, high, low, close bar in whatever markets you were following. So that took a lot of time because I used to follow a lot of markets back when I first started, you know. So things have come a ways. But the internet, being the source that it is now, creates overload of information, and a lot of it I don't think has any value because it's very easy to, you know, go down all these rabbit holes. So you've got the other problem of too much, and how do you sort it out? You know, you run out of time or dollars before you ever get maybe to something that you can actually use. So you don't need to do that. You know, in Bookmap, you don't have to be a subscriber currently, you know, to get all this. And I just think it's pretty amazing. I don't know, you know, and of course, you know, if you find value in how the tool was used, of course, subscribe to it. If you don't need it, don't bother. You know, I've used Bookmap since 2015 in its infancy, and, you know, I've been involved with it. It took me time to understand it because, like everything, there's no quick fix. You know, and you just have to say, okay, is there value in this tool, and does it give me something? Does it give you an advantage? And then it's a matter of cost. You know, it's like anything else. Do I get a yield? Well, I do, so I'm okay with that. You know, so we got 10 minutes-ish to go for the Fed. So I'm going to get my helmet out of the closet and my flak jacket, and just sort of, you know, see what happens. Don't be surprised if it's a violent move. If you get your data lagging and your computer chokes a little bit, that can happen if there's big volatility, and because there's going to be a lot of potential data crunching, you know. So don't be surprised, and just see what you can see out of it, you know.
Is the story changing any landmarks?
Jared, if the Discord link isn't working, then go to bookmap.com. You'll see a link up in there, and give it a shot. You should be able to get in there. I don't know why the link doesn't work down here. Maybe we'll have to kick the can a few times and get that fixed. So if you do get in there, go to the Trader Lab chat, not the voice channel because it's full, and click the pin at the top right of the text channel, and it'll take you to the top, and you'll see the PDFs. You can download those. You're all welcome to that. And there's also the introductory video up there, webinar I did, you know, which is kind of your crash course on auction market theory and, you know, all that. So you may find that helpful. And then you're all invited to participate in all the education. There's order flow education every day. There's specialists on different areas, icebergs, stops, how to use them, you know, besides what I do. You know, but reading the minutia of the order flow, pretty interesting, I think, if you're not familiar with how you might integrate it. Also,
Check context. Check context.
stocks, crypto, options, you know, so there's something, I think, the value here, and it's free. Free is good. So you might just want to take, you know, check it out anyway. And the Trader Lab is a community, you know, of traders working together, trying to get better together, you know, because we can leverage our experiences. I mean, we have a trader in here, one trader has been doing it 50 years. 50 years is a bit, there's a lot of experience there, and there's others that are new, you know, have been trading, you know, newbies. And so everybody has a perspective, and everybody brings something. And even if you don't have the answers, that's not the point. We all have the same questions. So anyway, you're all invited. Feel free. Oh, the link worked? Oh, great. Okay.
ES, pending VPOC alert. 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 ES, pending VPOC alert.
One minute till news event.
ES, pending VPOC alert. ES, pending VPOC alert. ES, long 3x3. Long 3x3.
30
ES,
seconds till
long
news
impulse.
event.
ES, long impulse. Check context. Check context.
20 seconds till news event.
Ten, nine, eight,
NQ.
Seven.
Long impulse.
six,
NQ.
Five.
Long impulse.
4,
Check context. Check
2.
context.
1. Event hazard guard trade zones.
Yeah, everybody, I'm going to be in standby mode, so I'm just going to watch like you guys. You know, I would recommend that this is not an event that retail traders should be involved in unless they have a specific plan, risk management, adequately capitalized, and all that. I'm just going to watch it like you guys are.
DHBN.
You'll notice the book will start thinning out. So I'm just going to sit back, sip some cool water. Well, the book's thinning out because you know, the algos turn off, and you'll notice the book is starting to go dark, and you're going to see here the it's all going to thin out. It's going to look like the NQ, most likely. So again, nothing to do.
ES, short 3x3. Short 3x3.
So I'm going to go silent here for a little bit. Hey Al, hi there. Observe how the book is thinning out. See the limit order book? This looks like the NQ over here. See? No algos, it's dark.
News event.
Helmet on.
Long mid-
This is the neutral IBF we were talking about. We went up to the HVN microcomposite high volume node at the IB high, broke through, came back. So this is mean reversion. These are not recommendations. It's too fast for anybody, right? So let's take a look at that. See? Now, so this is the what's called the neutral day and a retracement. So we came up to the level. Microcomposite high volume node at 3800. You can see the exhaustion. Chop, chop, chop. Microstructure. Break low. Pull back to the micro volume at 3800 and a potential short back mean reversion. And I'm not saying anybody should do this, have done it, or anything else. I just want you to recognize structure, and you can see it
impulse. NQ. Long impulse.
here.
Context. Check context.
Come on. My poor computer's like going, I'm going to get you.
Point reversal.
See this here, high volume,
NQ.
location,
Point reversal. Long
high of the day at the time, the initial balance high. And remember earlier today in the stream, I says there's a couple ways to play this. I said it's since we only had the initial balance low taken out, it was outside in, going back towards towards the mid, towards the VWAP. So those are mean reversion. It works from both sides. Download the PDFs and you'll see examples. Now we get the report. We take out the stops. There's the divergence price-wise. High of the day, only 8 buy stops. Thanks for playing. Chop, 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 break. So right in here,
IB alert.
let me isolate. Come here.
ES. Long 2P. Long 2P. IB alert. IB alert.
I want to show you
Long midpoint reversal.
as best
Long
I can.
midpoint reversal.
ES. Short 2P. Short 2P.
NQ. Short midpoint reversal. Short midpoint reversal. NQ. Long.
So here's our volume.
Long midpoint reversal.
Here's our volume.
NQ. Short
Here's our location.
Short midpoint.
Now this is off a report. Velocity. Remember, where's the buy stops? Over the high of the day. So velocity.
IB alert.
Here's 200 buy stops. High of the day. Logical. Price moves higher. 4 buy stops. Potential exhaustion. Don't know.
Midpoint reversal. Long midpoint reversal.
Micro volume.
IB alert.
Watching. Don't know. Location.
NQ.
This is, now you start in the deduction of the potential alignment.
ES, ES, impulse, long 3 by 3, context, long check.
High volume, break, pullback, location, under the IB, IBF, right? Stop is 2 ticks over here, right? Not taken out. Target, mean reversion,
S&P by stock 260.
target, potentially here. And then that trades over.
Long midpoint reversal.
Up to you.
Long midpoint reversal.
Where are we now? Where are we now? Huh. Overnight VPOC, see? Life in the fast lane. Doesn't matter, by the way. Everybody see this thing. I don't know. Where are we here?
NQ, long impulse.
ES,
S&P by stock 260.
Everybody see that?
Check
Check
contacts.
context, short 3 by 3, short 3 by 3.
NQ, short midpoint reversal. Short midpoint reversal.
Repeat, I didn't know Woody was still kicking around.
ES, short impulse. ES, short impulse. Check context. Check context.
He's automated, or this, or this his CCI is automated. He's got to be around since the 90s or 2000, I think.
Absorption ES buyers at 37.50.
So anyway, by the way, this is now material. This is the high volume area. It's like a VPOC, but it's in the 2 days of overlap. So this is a next level up high volume area. It's just like a VPOC. It's no difference than the microstructures where we have these little HVNs, except now we're in an intermediate time frame. We've also traversed the full range of yesterday of value. Remember, this was a target coming down that we didn't get to. Well, now we're in here. So now that puts this and this and this, all this on the potential hit parade. Just saying. Now, my focus, as you remember, is I'm based on 2 lots.
Long midpoint reversal.
So this is for the, kind of like building your foundation piece. The rest of this is all in the game, subject to the number of, either how you manage your trade, if you let the second one run, or if you use microstructure, that's a different topic. I just want to try to get you guys a tool that you can build a business around. So that's my goal. So you know where I'm at, right? Do you guys see the short off the top? The IBF from the top on a neutral day.
Short 3 by 3.
NQ, short midpoint reversal. Short midpoint reversal.
Yeah, repeat. Woody's been around. I wasn't sure, if he was still cooking, if you know what I mean. But I do remember Woody, I think, I don't have, my memory's a little blurry, you might imagine, but I think late 90s, 2000, right in there. Does that sound right?
Short 3 by 3.
Repeat.
NQ, short midpoint reversal. Short midpoint reversal.
ES, long 2D.
Yeah.
Long 2D.
NQ, long 1, 2, 3. Long 1, 2, 3.
Do you guys see the potential short that took place as an IBF based on neutral IBF configuration?
ES,
Everybody?
short 3 by
Nobody?
3.
What do you think?
Short 3 by 3.
Yep, saw it? Okay. Those of you that are in YouTube,
Short impulse. ES.
if you don't know what we're talking about here,
Context.
come on over to the Bookmap Discord chat. It's free. You won't be solicited, harassed, or any of that nonsense. None of us would put up with that, right? And so it doesn't happen. There's a lot of free education there. Stocks, options, crypto, of course this, and order flow specifically, you know, all kinds of different things. And you don't have to be a subscriber to take advantage of it. If you're interested in why there was a short off the high of the day, which is something I talked about earlier in the stream, I call it a neutral IBF. It's a mean reversion trade. The same trade that we were talking about this morning, which was from the long side, is from the short side. It is outside in trading, something that most of us probably are not, you know, mentally attuned to, but it is, again, contextual. Though there's PDFs, I've got about 80 of them in the Trader Lab. You guys are welcome, you know, to come over, visit, download them. There's also a fundamental video or webinar I did on auction market theory and volume profile, at least the way I interpret it. You know, my interpretation may not be what's in the mainstream, and it may be, directly conflict with what others view, and that's fine, right? And it's not a indication of a rigid process. It's kind of an understanding of market mechanics and behaviors that you will see repeat. Just like, by the way, right here is a selling trigger, right? Right? See? Alignment. Alignment. This is your chop, chop, chop with the micro volume right here. The break. It's a short. See? Where to? Back here. You know, so I'm not saying anybody should be doing this, right? But that's over 10 points. Anything wrong with that? I don't know. It's up to you. So, but you'll see this everywhere.
Long midpoint reversal.
Let's look at another one. Now, I wasn't even paying attention. You know, I've been distracted.
NQ.
ES,
Long
long
impulse.
impulse.
NQ.
ES,
Long
long
impulse.
impulse.
Short.
ES,
Short.
3 by 3, short 3 by 3, 3 by
Short.
3.
I'm just showing you the structures, okay? Bang. Short.
NQ. Short
Same.
midpoint reversal. Short midpoint reversal.
So these are triggers. Those of you who are interested in triggers, you can look at them. The key about a trigger is to understand it needs alignment with something. Just saying. See the retracement to the volume? Back here. Break. So here,
ES,
here,
2P,
here,
2P.
short triggers. Not recommendations, just showing you. Somebody was asking me, are these triggers right? Well, I understand.
For IBM,
Lunchtime
for
trade.
IBM.
Caution.
The only reason I see them is because I've been looking at them for a little while, like a long while. So it's music for me. I just see it, okay. I know what creates it, so I know what's inside it. You will too if you do the work. And the work means replays,
ES, short 2P,
screenshots,
short 2P.
annotations. I have binders and binders, and I don't mean the skinny ones, I mean the fat ones. In fact, I have so many of them, I throw them away as they get outdated because it's a progression of research and knowledge, right? Isn't that what we do? I consider myself, like, from a trading perspective, as like a forensic scientist. I'm looking inside. I'm trying to find the clues and the hints. I'm trying to differentiate my behavior and my view of the market from other traders. You know, and the Bookmap tool is one piece of that, right? And I can trade without it, but I can't trade as well. That's the difference, because I can't act as quickly because I can't see what I want to see. That's it. So, you know, is it worth it to me to have an order flow tool? And is it worth it to me? And for me, yeah, it is. You know, I'm not saying it'd be worth it to you, but it doesn't take much to cover the cost of something like this. And I don't sell Bookmap, you know, I use it. You know, that's it. And and it took me a while to figure it out. I'm a slow learner. I didn't understand it. I didn't understand any of this. And we also, when it first came out, it only had the bubbles and the liquidity. That was the basic tool back in 2015. It was really, you know, but it was the most sophisticated tool of its kind with the heat map when it came out. It was originally created for, I think, you know, high frequency traders. That was the original, and then, you know, when other traders became aware of it, they said, hey, I want that, and that's actually how it evolved. So it was not a retail product. It was an HFT. So that'll give you some idea. You know, the quants wanted to use it, and you can kind of see if you go into the add-ons, it had a chase, escape, execute for writing code and creating an algo. So all of that, you know, that was like the first part of it, pretty much. You know, so so that's the evolution of this product, and it was not intended for retail. It's just the retail went, hey, I want that. So that's, By the way, here's a triggering structure, not a recommendation. Let's watch. See it? See the alignment? Bang, bang. So watch the retracement. That's all. Not a trade recommendation. We're just touring. They pull, they can open the door. You got to be conscious now. Watch.
Mark trade zones.
Joe, a neutral day is market profilage. And really what it means is the high of the day and the low of the day are taken out. And more importantly, it's the first hour, I should say, the first hour low and the first hour high. In the market profile world, the first hour high and low is called the initial balance. So this was the first hour low. And then when we had the Fed FOMC announcement burst, we took out the first hour high, which at the time was the high of the day. And then we took it out. When we take it out, and it was taken out on stops, and we come back inside, it sets up mean reversion. It was the same trade we were taking from the bottom when we were under here initially, back inside. So all it is and it's called mean reversion. And it's a specific contextual trade. And that's why context is such a difficult component for traders, because they don't know what's going on a lot of the time. Not that any of us do. I mean, believe me, we don't know what's going on. But the fact is, it's possible at times to detect potential. That's all you got in trading is maybe. So maybe if we don't keep going after we come outside and we see the exhaustion, which we could see with the stops, the divergence in the stops, we saw exhaustion, you fall back inside, then everybody who's long is off sides. Then it's that come all the way back to balance and potentially out the other side, which is what we did. That's the trade. What happens after that, that's a different animal. It's like a different issue. Does that make sense?
Honor yourself. Honor yourself.
Jeremy, I don't understand. Right, Jeremy. Then we got out under the IB low, right, Pete? So we did come out the other side, right? Where are we here? Do we make a new low, Pete? I think we did. Yeah, we got, see this target here? Micro composite VPOC. This is a price check in the intermediate aisle, right? See how this aligns? Now, let's be clear. Nobody knows. What happens is we know what might happen. We don't know what will happen. So I don't know ever what's going to happen. So let's get that straight right away. The other part is I don't know where it'll go other than where it might go. That's also the fact. We got in here, we got under here, we had this, but this was the most recent auction, which was the last 2 days. This was your VPOC, your volume point of control for the 2-day volume. So this was the fairest price of the last 2 days. I'm taking it up a notch to the next time frame. This is the fairest price today at the moment, and this moves around, right? And the microstructures are the fairest price in these little consolidations. So it's a generic behavior. This is the next higher time frame. In my little world, this is not a coincidence. Does that make sense? David, it took me a while to get comfortable with Bookmap because I didn't understand. And their education has really expanded over the years, you know. But the tool was not complete compared to what it is today. I mean, it's been enhanced because we didn't have icebergs, we didn't have stops. You know,
2P. Short 2P.
it was black and white. I mean, it looked like, this is the legacy. This is kind of what it looked like when it first came out.
Pending VPOC alert.
So this was what it looked like, you know. So you're
VPOC alert.
trying to differentiate, you know, look at the difference in how you can read it. So you know, it's like any tool,
IB alert.
you know, and it evolved. Now I like this better. I can see the difference in the book better, you know, where the larger, you know, bids and offers are, you know, so I can see that better, and I can see the movement clearer of the algos and, you know, all of that.
NQ. Pending
It's just easier to read, but it wasn't like that. So yeah, it took me time, and it was a new thing for me because I didn't grow up with a dome. You know, when I started trading, it was, you know, you pick up a phone and talk to your guy on the floor, you know, so there was no domes. And when I started trading, there was no volume either. You got to understand, we didn't get the volume.
Long midpoint reversal.
And that's why technical indicators like on balance volume, which are really tick, you know, were kind of substitutes for volume based on the number of up and down ticks, and they were time based, you know, all this nonsense. Those were the tools that evolved to try to supplement not having this information, you know. So that's kind of, you know, so indicators evolved also to try to fill the gaps, you know, because the data wasn't available. So, you know, and all we had, you know, then we had tick charts. And then in the first, CQG came out with something called the TQ 2020. That was like their first,
Midpoint reversal.
you know, charting package where you could actually have time charts, tick charts. And then it was loaded with, you know, oscillators and all the typical stuff, you know. So that was pretty hot. And there was another one I think called CompuTrack, which was a competitor early on. And then Bloomberg, you guys all know about Bloomberg. I think he started his business. The Bloomberg terminal, I think, came out around 80-ish or 81. You know, it was so I'm just giving you an idea. That's kind of when I started. And obviously, I was on a different planet than where we are today. Pull back to VPOC and VWAP, potential short opportunity, not a recommendation. This is mean reversion, right?
IB alert.
But look where we are. IB low, high volume node, VWAP, VPOC mid. What do? Retail trader behavior. Pick those guys off. Thanks for playing. Potential short. Watch. Not a recommendation. Now we already got to a target. So
Short impulse.
potential
Yes.
retail,
Short impulse.
just rotational trade. Where's the volume down below? We got it here. See the alignment with the liquidity here. Scale would be in here. I'm not calling trades. I'm just telling you what I'm reading. Because I don't know. So this would be, your scale would be here. You'd have a short. Nothing wrong with this, right? 70, it's almost 10 points. Thanks for playing. And now you hold. Or you're done. See? Watch. Is everybody tracking? I mean, I'm not really paying attention, right?
ES.
But,
Long 2P.
you know,
Long 2P.
yeah, other brother, I don't know what it's going to do.
Absorption ES buyers at 3760.
So let's observe the behavior here. This was a target, right? Don't forget that. Now it can do anything. If we break below here, you know, I'm going into the bunker and I'll catch you like, you know, in a month.
Short
But
2P. Short 2P.
can you see a short? What did we do? Let's take this. Now I'm operating, remember, in multiple time frames. So this is where it might be
Yes.
confusing.
Long 3 by
But
3.
I'm
Long 3
isolating
by 3. ES.
fractals.
Short 2P.
This is the developing daily time frame. This is the higher time frame. We checked it, we went away. Too low at the time. Where'd we come back? To this one. This is the same as that. This is higher time frame. This is developing time frame. Price check in the big aisle. Too low at the moment. Remember, subject to change. Back here, Take the stops. Where are the stops? Mid, VWAP, price check in aisle 3. Here's your stop pick. Break, pullback,
Absorption ES5.
break high, break low, potential short. Wherever you feel you want to jump in, you do. Your stop has to be here. Now remember, we already checked this. How far do you take it? I have no idea. Now, you're wearing that helmet again, and you have your trade management plan in. We take this out, and we get under here, because we're in yesterday's value. See?
ES. Long 3 by
We can
3.
do anything.
Long 3 by 3.
And this might be rotational in here. Same process, fractal. Higher time frame, developing daily time frame. Micro time frame, micro volume inside. If this, then that. If not, then what? If we check here and bounce, then what's the potential? Back here. If this is too high, then what's the potential? Rotate back here. And maybe stay inside, or break out of here, and then
ES.
what do we got?
Long 3 by 3. Short 2 long 3 by 3. Short 2P.
This, 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 this. Don't know. However, check there, check back at the VPOC. Inside a higher time frame, in a developing time frame, using the microstructure for triggering. Is everybody following?
Absorption ES sellers at 37.58.
Sorensen, I'm not familiar with toss. Toss is really a strip down, you know. Repeat, I don't follow you. You haven't been here for a while, Repeat. I hope you've been well.
NQ.
Really?
Midpoint reversal.
I feel like I know you. I don't know.
NQ. Long 1, 2, 3. Long 1, 2, 3.
Repeat, at this stage in my trading, you know, my eyeballs are rolling around in my head. And you know what I'm talking about.
NQ. Long midpoint reversal.
Is this good, guys? You getting something out of this? Is there some value in what you're getting? Can you use it? You guys over in YouTube, I hope this is helpful. You know, it's trading, you know, and at best we know we don't know, so please remember that. And all you can do is do what you can, and manage your risk is job number one. And then try to put the pieces together in a process that you can vet and have some kind of probability that you can measure. If you don't have that, you're a gambler, and that's not so good. I always say if you're going to gamble, go to Vegas, get a cocktail, see the show, and you know whatever else, maybe the buffet. For me, a ribeye might do it, but the buffet, maybe, I don't know. But if you're, you know, also in YouTube, if you haven't come over to the Bookmap Discord chat, to the Trader Lab, you're welcome to come over. It's free, of course. There's a big group in there that interacts, and it's the idea behind the Trader Lab was to leverage all our experiences. There's traders in there with 50 years experience, and we have traders that are just kind of getting started, you know. So everybody brings a perspective and an experience. But the collective knowledge is the leverage and how we can all get better. There isn't one way to do anything in this. It's only the way to kind of, you know, what gives you a sustainable business and what are some of the pieces. And that's what my objective is with doing this. Also, if you don't, there's PDFs you can download in the Trader Lab, about 80 of them, of examples of these behaviors and the documentation of them, which you might use to research and build your own plan. There's also a introductory webinar on the mechanics of this auction market theory and, you know, how I use it anyway. And what I do, I don't think is what many others do. And I'm not saying anybody, there is no right or wrong way to do anything. It's just the way that you can believe in and what works for you. So I just share some of the components of what I do. And it's really about kind of giving you a foundation and a structure that you might build something on for yourself and create a business. This is about the trade. Trading is a business, and all businesses have overhead, cost of production. If you have a vetted trade plan that you can believe in, and belief is an important part of it, then you have the ability to have a business. And then you look at this differently, and you look at it a random distribution of outcomes. You don't look at it, gee, I wasn't right today. Because your trade plan is your guide. You're accountable to the plan you create, not to the randomness of what is the market and the participant behaviors. The objective is to try to recognize behaviors that tend to repeat in the market, and whatever tools you use, that's great. It's just a matter of, do you have statistics? If you don't have statistics, what's going to happen is you're going to keep jumping to indicator, to the latest fad, to something you hear, oh, the magic indicator, I made $5,000, somebody will say, and you can have it for life for $600, all that nonsense, which you all know about.
ES, short impulse.
Well,
Check context.
you got to do the work, and then you can skip that part of the travel, the road we all go on, right? Or the next indicator, you can skip it, because all I'm saying is you got to find what speaks to you, and if you don't vet it, you can't believe in it, because then you'll be changing it. The other thing is you need a consistent process, so you have a way to measure it. If you can't measure it, you can't quantify, you can't create belief, because you're always going to question it. That's what's required. It's not the fun part of the job. I mean, the fun part of if there is, you know what I mean, the part of the job that's fun is doing your thing and seeing it work over time, and knowing that along the way it's not going to work, and it's just overhead. When you can never completely separate yourself from your emotional states, but you can recognize what creates those emotional states and put them aside, because they're going to be triggered by this kind of behavior. But if you have the statistics, you can open your stats and say, when I take this neutral IBF, it works X% of the time. I get to the scale, I get to the target, whatever it is. I get to the opposite target all the way on the other side, X%, and I know that. Okay, how many do I want to put on? Okay, 2, 3, 4, whatever it is, based on my research. And that's how you do it, in my opinion. Watch here where we are. This is important, the behavior right here.
ES sell 500. S&P sell ICE 500.
See the stops? Watch the behavior here. This is important. So this is important. This is important here. So we'll see. Is everybody with me?
S&P buy ICE 500.
Did you ask a question of me, Sorensen? Did I miss it?
Absorption ES sellers at 3,736.
Did I miss something?
S&P sell ICE 500. S&P sells top 219.
Sorensen, it's kind of where the reaction is, and I am trading the fractal, so I'm trading inside out. So coming down, I'm looking at this for the neutral IBF, because it might not come outside, So in the configuration we're in, this is the target coming down. If this would be an extended target, and now that we're under here, things can get funky, So now it's the potential, because this is material, so this area is material. So now we're breaking below it, then it's going to become a retracement to it. And if not, then not. That's just the way it goes. But this can get rather nasty. And I don't know. But the priority of inputs is micro inside macro, and up. So I was trading inside of this, but this was the developing behavior. And then the microstructures are the more the triggering behavior to identify it. So let's watch this here and just see what happens, okay? No trade recommendations, guys. This is, remember, all we do here in the Trader Lab is observe potential phenomena and we go from there. You do need a trade plan. So watch this right here, right here. Watch this. Watch the structure. Watch the volume. You can see it there. So watch. These are the areas to watch. We're just tourists.
ES, short 2P, short 2P.
Absorption ES sellers at 37.40. S&P buy stock 274.
NQ, short midpoint reversal. Short midpoint reversal.
So we're observing this area.
Mark trade zones.
Outside.
Not a recommendation. Just keep,
Mark
you know,
trade zones.
tighten your belt and see how it behaves. Right in here.
ES, short 2P, short 2P.
Watch this right in here. Right at the location. We're just observing, right? You can see it. Right here. Right here. Nothing to do, right?
NQ, long midpoint reversal. Long midpoint reversal.
ES, short 3x3, short 3x3. ES, long 2P, long 2P. ES6, long consolidate.
So that is not happening.
NQ, long
ES,
impulse.
long impulse.
NQ, long
ES,
impulse.
long impulse.
Check context.
Check context.
Check
Check
context.
context.
NQ, short midpoint reversal. Short midpoint reversal.
There's another triggering structure to observe only. It has to get below that microcomposite VPOC. Nothing to
NQ,
do.
long midpoint reversal. Long midpoint reversal. NQ, short 1, 2, 3. Short 1, 2, 3.
Absorption ES
Nothing to
sellers
do.
at 37.50.
So now we can come back up.
NQ, long impulse. NQ, long impulse. Check context.
Absorption
Check
ES
context.
sellers at 37.54.
NQ, short midpoint reversal. Short midpoint reversal.
Fairly choppy. So, you know, this was important. It's not done yet, you know, but I have, now it's out of my, you know, my
NQ,
level of
long
understanding.
midpoint reversal. NQ,
Because
long
this
midpoint
now
reversal.
becomes,
Buyers at
you know, back to this.
Context. Check context.
Alert. ES, short long 3x3. Short long by 3 by long 2P. Long
NQ,
2P.
short
IB
midpoint
alert.
reversal. Short midpoint reversal.
IB alert. IB alert. IB
ES,
alert.
short
IB
2P.
alert. Short 2P.
NQ, long
ES6.
midpoint reversal.
Long
Long
consolidate.
midpoint
2P.
reversal.
Short 2P.
NQ, short midpoint reversal. NQ, short midpoint reversal. Long midpoint
ES,
reversal.
short 2P. Short 2P.
Absorption ES buyers at 3,769.25.
NQ, short midpoint reversal. Long midpoint reversal.
Long
3 by 3.
Long impulse.
HVN.
Check context. Check context. ES. Long 3 by 3.
AHVN.
Long
NQ,
3 by
long
3.
impulse. NQ,
ES,
long
long
impulse.
impulse.
Check
ES,
context.
long impulse.
Check
S&P
context.
buy stock 251.
NQ, short midpoint reversal.
Pretty wild, huh?
Short midpoint
ES,
reversal.
long 3 by 3.
VHVN tested 37.90. Price check in aisle 3. Watch the behavior here. Got to watch the behavior up here also. This is a potential
Short impulse.
area to observe right here.
Check context.
NQ,
Check
long
context.
Let's
midpoint
just see.
reversal.
No
Long
clue.
midpoint reversal.
Very volatile.
Short ES6, long consolidate.
Absorption ES buyers at 3,784.25.
Iceberg executed there. Or he went off. Microstructure. These are not recommendations. We're trying to read it. We have alignment. We also have stops up here.
Long 1, 2, 3.
So let's observe.
1, 2, 3.
VHVN. Imbalance, use higher time frame, use higher time frame.
So this is the alignment
Short impulse 3.
currently with a developing time frame
Long midpoint reversal.
on a retracement.
Short 3 by 3.
This might have been an outside extreme. There's still stops sitting up here, so we can come up here.
Long impulse.
This is the alignment for the initial short. Remember, we took all the way from the
Check
top,
context.
in theory, that we were discussing. This has to get below here,
Absorption ES
otherwise we can continue going higher. The reaction took place here because this is a level that we have isolated.
Reversal.
We come above it, then
Long
this.
midpoint reversal. Long
So we have to
midpoint
watch
reversal.
and see what happens.
Long 3 by 3. Long 3 by 3.
VHVN. VHVN.
NQ, long impulse.
Mark liquidity.
NQ,
Mark
long
liquidity.
impulse. Check context.
IB
Check
alert.
context.
Both sides are really going at it, aren't they?
3,800. S&P buy stock 290. Iceberg ES sell 585. Trade ESU to CME at rhythmic buy 272. S&P buy ICE 510. S&P sell ICE 640. Absorption ES sellers at 3808.
ES, short 3 by 3. Short 3 by 3.
NQ, short midpoint reversal. Short midpoint reversal. NQ.
Sorensen, why don't you just watch it if you haven't? If you haven't watched it, you're just not going to be up to speed for the language and some of the other things here. A lot of what you're going to see here is really more in the current time frame, Now, Fed Day is just one of those days. There's, it has outsized risk and opportunity, and you can kind of see it on display here.
NQ, short midpoint reversal. Short midpoint reversal.
Absorption ES sellers at 3,810.25.
The way to view this is really like a fight. Let me look at something here. Yeah. We have a potential target up above at 38.31. It's not on here. Shame on me.
ES, short impulse. ES, short impulse. Check context. Check context.
Let me check that. Yeah.
ES, long 3 by
Absorption
3.
ES buyers at 3806. S&P buy ICE
NQ,
532.
long midpoint reversal. Long midpoint reversal.
This is the next potential up here, and of course it's not a recommendation, but this is a volume point of control that was left behind last time we were up here.
Long impulse.
Now we've auctioned both sides, right? I mean, this is a pretty wild day.
Check context.
Short 3 by
Check
3.
context.
ES,
you know, this, checked it. Remember, there's no precision in any of this. Came back inside. I mean, we've gone both sides. This is two-sided trading. One of these guys, and it might be the sellers, right, are going to be in trouble.
S&P by IC
The market's been short,
Point reversal.
absorption ES sellers at 38.20.
so we can squeeze. And that's apparently, or not apparently, but that's potentially what's going on here. So the shorts might be pushed out, and if we can get through here,
S&P by stock
there's this,
747.
there's this. So we'll see. Now, if Powell's testifying, you know, we're being moved around by comments and perspectives and perceptions. 1,000 icebergs going off here, 800 over here. You can kind of see there's a lot of buying going on in here. Also, this is showing the large lots are active on the buy side, the 10 lots, and even the little retail guys.
NQ.
S&P sell IC 505.
So everybody's on the long side at the moment, even the big players.
S&P by ICE 501.
So let's see if we get here. This would be the next potential target based on auction market theory, and if we get through here, we can get up into this one, higher time frame.
EX, long 3x3.
This is an artifact that was left behind in the the developing daily time frame that we had left behind. It's a price check in aisle 3. This was a price check in the big aisle. This is a price check in the daytime that we said was too high, and the market traded away from it. So now we have the potential to come back and check it. Is that still too high?
Balance, caution, caution.
In the intraday time frame, we had checked this, and if you remember, we had sold off it, I think, the first time we were up here. So these levels are material, but since it's an auction, things change. And obviously with the Fed, we have fundamental inputs going on here that disrupt the whole thing. So anything can happen,
Short midpoint
which is every day in trading anyway, but today is more susceptible. Remember, this is our potential target up here.
S&P sells top 200.
Whoops. Sorry about that.
NQ. Short
So,
midpoint reversal. Short midpoint reversal.
naked volume point of control was a target on the way up. Close? Is that good enough?
3x3.
Have no opinion. Structure. Chop, 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 break high. There's your beginning of your trigger, break low. Trigger,
2P.
pull back,
Short 2P.
potential short in here. Stop here or here. That's your call. Break high, break low, pull back, still structure. This is your target. I think up here is a little better myself. Scale, depending where you're in, target. Still have the possibility to come back here. And again, no idea. But this is the structure. Remember, retail trader behavior, where's their stops? Under here. So potential to get under here, and then what? Don't know. Or not. So let's observe. Is this better with the audio? What do you think?
NQ. Long 3x3. Long 3x3.
ES, long impulse. ES, long impulse. Check context. Check
NQ.
context.
Short
So is the audio okay?
Short midpoint reversal. NQ. Short 2P. Short 2P.
ES, long 3x3. ES, 3x3 impulse.
Okay,
ES,
thank you.
Short 2P. Check context. Short 2P. Check context.
Yeah, sometimes you gotta unmute the microphone, you know, one of those things. This is our potential target down here, retail trader behavior, and stops under here.
NQ.
Again,
Long midpoint
no
reversal.
idea. This was our target on the upside. Horseshoes, close. Microstructure for triggering, right here. See, no way to know it's not going to push. The thing is, you have the consolidation, the trigger happens, you get the false break high, break low, that is your trigger. Then it's a retracement. Where's the volume? The volume is here, so that's kind of your backstop, and this becomes your target.
S&P sells top 300.
And then potential here, mean reversion. Let's see what it does. Again, no idea, right? If you put it in the sense of the auction, this was a test of the in aisle 3 in the time frame relative to a artifact left behind that was too high. We came back to check it. Pretty close. No perfection, right? No perfection. Then what? If it's too high and now we have a trigger, where are the retail stops? They're here, under here. So that would be your primary target. If we get inside, then it's potentially, now we could do two things here. We can come under on these stops. You see the stop divergence. This is a potential buying structure for the counter rotation. You can come up, pick stops here. If there's no follow through above here, then here. So if this, then that. If this, then that. If not, then back. So you see so we are incorporating potentially auction-based behavior plus retail behavior. Because we got the stops here, ran out of sellers, came up, took the buy stops, retail trader behavior, then it's two possibilities. Up or, so if this, then that. If we take the stops, we don't get back above, then this. If not, then what? Then that. Up. Does that make sense?
VHVN.
NQ. Short midpoint reversal. Short midpoint reversal.
So we get back above here, we can come back inside. Okay. If we don't, after this, then this. That's next on the hit parade. Let's watch. A little manic today, huh? I don't mean me, I mean the market, but that's the market, you know.
ES, long 2P.
When you get volatility like this, you notice the risk goes up and the range goes up. You have to have a plan that fits this. Or drop down to the micros if, you know, or whatever, or go on sim, whatever. You know, everything's got to fit your plan and your risk tolerance and account size. You know, if you're actually trading today, and we know FOMC can be, you know, abusive. Remember, retail trader behavior.
NQ.
here,
Long midpoint reversal.
here.
Long midpoint reversal.
We're still in mean reversion.
VHVN,
NQ.
Long
Long
zone,
zones.
higher
Higher
time
zones.
frame,
Long
use
zones.
higher
Check
time
context.
zones.
Check
ES,
context.
long impulse. Check context. Check context. Long 2P.
A lot of volatility.
Long 2P.
Got to watch for the pick of the stops up here. This is where it fails.
ES, long 2P. Long 2P.
So we want to watch this structure right here
ES, short 2P.
against this structure right here.
Short 2P.
Right here.
NQ.
Come up above here, it's probably going to take these guys out. Not a recommendation.
Long 2P.
If not, then we might continue here and that's it. Don't know.
NQ. Long midpoint reversal. Long midpoint reversal.
And if we do take these guys out, we want to observe the behavior.
NQ. Short midpoint reversal. Short midpoint reversal.
VHVN,
Are you guys with me?
VHVN, VHVN,
ES, short 3 by 3.
VHVN,
So where are the stops? If we can stay under this IB and not get this top out, then we have the potential to get these guys
ES,
under here.
long 3
This
by
is, so that's why this is the next area to observe. If we get these guys, then that's that, you know.
Long midpoint reversal.
VHVN,
Just think retail trader behavior. Now, there's two things with the retail traders. They got stops here,
VH,
and they got stops here.
Long 2P.
VHVN,
ES,
We're inside the
short 3
IB,
by 3.
so this is the
Short 3
IBF,
by 3.
right?
Honor your stop. Honor your stop.
So now we got to see.
VHVN,
So this is mean reversion, which doesn't mean anything.
ES, long 2P.
VHVN,
Long 2P.
VHVN,
Absorption ES buyers at
NQ. Short
3,789.5.
midpoint reversal. Short midpoint reversal.
ES, short impulse. ES, short impulse. Check context. Check context.
Mean reversion,
ES, long 3 by
Right.
3. ES, long 3 by 3.
going for here.
2P.
Mean reversion is return to balance.
3780. S&P sells top 3.
Mid, wherever that is, somewhere in here. So mid VWAP VPOC.
2P.
There's your targets
2P.
for this part of it, right? I think it's okay.
VHVN,
NQ.
What do you guys
Long
think?
midpoint reversal. Long midpoint reversal.
ES, short 2P. Short 2P. ES, long 2P.
Is everybody following?
NQ. Long impulse. NQ. Long impulse. Check context. Check context.
So that's what mean reversion is. Now, what happens after that?
ES.
No
long
idea.
impulse.
To me, this is the primary objective of mean reversion,
Check context.
is the fuel and the return to the mean. Mean reversion. After that, there's no way to know. It can be a long out of here back to the IB high. It can also just be a counter rotation off of there and the potential to come back to the other side. And I have no idea, of course, right? I never know anything. So I just know maybe always. And then it's a matter of see, for me, it's a confluence of things. It's the auction, of course, but it's retail trader behavior. So up here, we know where the stops are, right, above the IB.
30 seconds.
And we know where the stops are on the other side, the mid, VWAP, and this is the mean. So that's how the trade is structured, you see. Now, what happens in between, I have no
20
idea.
seconds till news event.
I know if I stay under here, or even retrace and pop it and come back down, it can repeat, and I can come back inside again.
2P.
Set NQ.
6,
Short
So we'll see.
reversal. Short midpoint reversal.
3, 2, 1.
ES.
Event has
Long
occurred
3
in
by 3.
context.
Long 3 by 3.
So for me, the primary objective of this has been accomplished.
Long midpoint reversal. Long midpoint reversal.
And it doesn't mean I can't activate inside of all this, but I'm just trying to share, let's call it primary concepts. And then, it's, you know, you can take it much further than this, you know, but you need to kind of understand what the potential behaviors are of these things based on auction market theory and what you see right in front of you, especially when it comes to targeting. And, you know, that's why this was the primary. Because we don't know. I mean, it could keep going, you know, come down to the other side or not. Or come back and take these guys out now that are here. Remember, and here they go. So now let's watch. My poor little computer is starting to groan. I mean, does your computer make noises? Mine is like a little pit bull. It growls at me.
IB alert. IB alert.
Okay, let's watch the behavior. Stop pick. So let's see what it does right here. Retail, we got them on that side, we got them on this side. So what happens right here is important. Watch this structure right here. Little micro high volume, you can see the node. What do we do? Come back in, push out. What do you think? Don't know.
ES. Short
If there was a long off here, which we did not, and that's not, you know, anything I think about at the moment, it would be, this would be the target for your scale or all out. So now, and because it's trading into stops, so now if this again is a short, it's the same trade again. I'm not saying it is, I'm just saying if it was. Is everybody tracking? So I'm trading a confluence of behavior and retail behavior. I'm using the retail behavior as targeting. So now I have longs. They got the stops above the IB. Now there's the potential for shorts for the stops again now under here. Mean reversion still. Not of recommendation. Can you see it? What you've got here is VPOC, VWAP, mid buyers. Now, I have no clue who's going to win this little fight. We took these guys out, they got long. We took these guys out, now we got short. Now somebody's going to flinch. Which side? Who's vulnerable? These guys. So that's the trade. So inside to here, squeeze to here, structure here, short back inside, you'd be scaled, again you're coming back here. Theoretically speaking, we're just saying. We're observing potential behavior, and these aren't trade recommendations, right? Because we don't know. And we don't call trades anyway here. But it's something you can study and think about, right? Because we don't know what's going to happen. If you take this out, then back north of the border. If you don't take this out, these guys are now on the hit parade. Can you see it? Repeat, you dance with the snake and with that NQ.
ES. Long 3 by 3.
Same process works in NQ, by the way. Actually, it works across all markets that have liquidity.
NQ. Long midpoint reversal. Long midpoint reversal.
ES. Long impulse. ES. Long impulse. Check context. Check
Pretty
context.
squirrely, isn't it? See right here, so we have a selling structure. We have a retracement to it right here in the volume. See it? We have a buying structure.
ES.
So we have two sides right here. You got the volume in here is your support. You have the volume in here as your resistance. Whichever side folds up right here,
Outside
Mark trade
microstructure.
zones.
that's going to tell you which way we're going to potentially go. Not a recommendation we got to watch. So let's observe it.
Short 3
See
by
the
3.
volume,
Short
which
3
comes
by
out of
3.
here. See the volume,
NQ, short midpoint
which
reversal.
comes out of here,
Short midpoint
which is the
reversal.
test here. So this is your fight right here. This is trench warfare.
HVN.
See it? So I can look at this and I can say, okay, this is it. This is the fight. Whichever side folds, it's going to break out.
NQ, long midpoint reversal.
That's all I
Long
know.
midpoint
And even
reversal.
that I don't know. See? We're holding this and we got this.
NQ,
So one
short
side
one,
is going to
two,
throw the
three.
towel.
Short 1, 2, 3.
And I'd have no clue, except I know there's stops here. I know we got the stops
NQ,
up here.
short midpoint
So
reversal. Short midpoint
who,
reversal.
where's the fuel?
3 by 3.
DHVN.
If we can get under this volume,
DHVN.
here. If not, and it's a fight, you can see it. It's like war.
Long midpoint
Whichever
reversal.
side retreats and
midpoint
folds,
reversal.
it's going to release that energy, and I can't tell you which one. So that part I don't know. You know, I mean, not that I know
Long
anything,
3 by 3.
but
Long 3 by
we're
3.
seeing the fight, right? And one side will capitulate.
ES.
That's why whenever you do any of this stuff, you got to get scaled because you don't know. So far,
ES.
you see
Short
it.
3 by 3.
The volume
3
is
by 3.
across here. The volume is
ES.
across
1
here.
Long 2P.
So let's observe it.
IB alert. IB alert.
NQ,
No balance.
long impulse.
Honor your stop.
NQ,
Honor
long
your stop. IB
impulse.
alert.
Check
IB
context.
alert.
Check context.
Absorption ES buyers at 3,801.25.
You see one side is starting to fold up. So let's see.
ES. Long 3 by 3. Long 3 by 3. ES. Short 2P. Short 2P.
Okay, watch the structure here. Does look like the buyers have it though. We'll see. We have not taken this out
IB
yet.
alert.
NQ,
IB
short
alert.
midpoint reversal. Short
IB
midpoint
alert.
reversal.
IB alert.
Really is a shootout at the OK Corral, isn't it? This is the high here. This is your structure, this here. So that's why when I talk about this, I say, well, you really want to hide behind this structure. Now, I don't know. I'm still continuously clueless. Chop, 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 break, right? Break low. Now you got your volume here.
IB alert. IB alert. IB alert.
NQ,
IB
long
alert.
midpoint reversal.
I have no idea, and that's okay, because I never do.
NQ,
IB
short
alert.
1, 2,
IB
3.
alert.
Short
IB
1, 2,
alert.
3.
IB alert. IB alert.
All we have is structure and potential. The key of all this is to get risk neutral, and then
IB
see
alert. IB alert.
if we get to the target before we take out the structure you leaned on, you know? And that still puts this online if we can break down. If not, we're going to squeeze and take all this out, and then we go back up again. So that's all there is. Again, they're not recommendations. It's just what might happen, and that's all you ever know. Yeah.
ES, short 3 by 3. ES, short 3 by 3. Long 2P.
What's interesting is down here, you can see it. We had these guys,
NQ.
the buyers here,
NQ. Long impulse.
ES,
Check
short 2P.
context.
and we had the seller side up here where you can see the fight was. When we released this, now we had another shot here,
IB alert.
came down to this volume, which is what we tested here,
IB alert.
tested again, and then we lift it off. Now, you don't know what it's going to do, but I think you can read it. And then you know, what do you do about that? You know, well, do you cover? What's your trade plan? That's a whole different topic, right? But I think you can kind of stay engaged with it. Now here, I think was the last shot, you know, here. Now we've taken the structure out. So now we'll see.
ES, short 2P. Short 2P. alert. IB alert.
This is a selling structure potentially,
IB alert.
not a recommendation. Let's observe it again. That's all you got.
IB alert.
It's really volatile, and it's, you know, if it's not your trade, I'm not saying it's mine. I'm just trying to narrate it for you.
NQ. Long midpoint reversal. Long midpoint reversal.
But we are, you know, you just have to be conscious that we had a shot and we didn't get it. So, you know, it can do anything from here. If we fall back inside and we can get back inside, then we're back on the same thing again. And it's just potential, right? What you need, in my opinion, is you need to build a trade plan around this. And if this is too erratic, you can go, this is not my kind of trade. You know, we are trading news and we're trading, you know, a big event, and there's a lot of volatility apparently, you know.
ES, long 2P. Long 2P.
This is the same process. You know, what this is still mean reversion. We're still going for this,
257.
right? So that's why for me, the whole thing, or the number one item, is the risk neutral aspect of it, you know. And if you're careful where you get in and you can see where it fails, you know, then the scale. Because one of these potentially is going to get to our target because it's still mean reversion. It hasn't changed. It's volatility, you know, and chop, and it's the range is, you know, wide. We're getting the opportunity because of the volatility.
NQ. Long midpoint reversal.
So we'll see if we get
Long
back
midpoint reversal.
into this, because these are the targets.
VHVN, VHVN,
It is pretty wild.
VHVN,
So if you're taking this, you would be scaled, right? So you would be risk neutral, even if you got it in here against here. Chop, chop, this little consolidation, break high, break low, pull back to this. Stop could be over here.
VHVN,
And you're inside this higher structure.
Mark liquidity.
Break high, so you're inside a higher structure.
NQ. Long impulse.
Break low, break high, chop. So all this is selling structure. Scale, helmet, targets are here.
VHVN,
Stops are above the IB high, so we could get a check or not.
Short 3 by 3.
If not,
VHVN,
then our next stop on the hit parade might be down here. Might. This. All this. Mean reversion. Plus retail stops. Or not. Or back above here and squeeze. And there's no way to know. So it's a matter of what is the context and trying to stay in alignment with it.
NQ, short midpoint reversal, short midpoint reversal.
Mark trade zones.
Well, Rainier, I'm glad it helps. Rainier, you're in Switzerland, right?
Unfortunately, ES sells at 37.83.
ES, short impulse. Check context. Check context.
Okay, we want to watch the behavior. This is our area. Remember, mean reversion. So we'll see what it does. There's also going to be stops under here, but this is the primary objective of mean reversion.
Long midpoint
Retail
reversal.
stops are under
Long
here,
midpoint
so we're
reversal.
kind of interested in all this.
The HVN.
So we'll see what it does.
The HVN.
Retail stops are here,
Caution, caution.
up here.
Wait for outside.
And
Wait for outside.
Trade fails over here.
Long impulse. Check context. Check context.
If you run tight stop, especially over here,
Long impulse.
good chance you'll get taken out.
Context. Check context.
If we stop and we pick this and then come back inside, it really doesn't change anything. But the stops here are easy picking because retail trader behavior. So we'll see what it does. It can do anything, right?
Long 3x3.
So let's
Long
observe.
3x3.
The HVN.
If you're over in YouTube, feel free to come over to the Bookmap Discord Traders Lab.
The HVN.
It's a collaborative group of traders like-minded and trying to get better.
Watch for out of bounds. Placing trade
So
orders.
it's a collective forensic research unit, think of that.
NQ,
And
short midpoint reversal.
it also pinned to the top of the Trader Lab chat is PDFs you can download of examples of these behaviors. So you can kind of look at them, you know, in the calmness versus like in this kind of volatility, and see the same structures and behaviors documented. And there's also an introductory webinar on how I use volume profile auction market theory. And I think what I do is kind of unique in some ways, you know. But it doesn't, and all it is a basis of something to think about and to understand, get a better understanding of market mechanics. You know, why it does what it does. You know, an indicator doesn't tell you why. If you understand the why, I think you'll be a better, have the potential to be a better trader. And not look at, I don't use any indicators. You know, because I don't want the conflict they create. And they look in the rearview mirror, and most of them are derivative of moving averages, you know, if they're oscillators. So I don't think too much about that.
NQ,
And it's not that I haven't worked with them. I certainly, my path is similar probably to all of you.
Unfortunately,
It's just I've done it longer and started earlier.
89.5.
NQ, short mid, NQ.
So
Short
but
midpoint
something you
reversal.
need to always keep in mind is that rotations are random. And when you're looking at something like this and you go, oh yeah, here we go, and then it comes up like this, how does that impact you psychologically? You know, you need to learn about yourself, and you'll never look in the mirror until you sit in front of and you trade and look at the monitor, because you'll never have to see your fear and your triggering mechanisms, the fight or flight and all that, and you never really face it on it
Long midpoint reversal.
many times in a day, you know, like we do here in trading. So it's a new experience for us. You know, one moment you think it's all good, and then the next moment you're ready to jump out the window and bail out. You know, all those emotions, right? You feel them?
Unfortunately,
Well, we all do.
sellers at 3,700.
That's why this business is more a statistical game, and it's not an emotional one.
NQ, long 2P, long 2P.
These are vulnerable here.
The
So we can
HVN.
reach into this, and if we don't go anywhere,
The HVN.
then back
The
here,
HVN.
or never. See, you don't know. So you just hang out. Let the trade ferment.
The HVN.
Like a fine wine, right? The key to the trade is always getting risk neutral.
Long 3x3.
And then see if you play out. And where this trade fails up here, it doesn't fail here, because that's where retail stops are. So the market has a tendency to come back here.
Is the storage
So for me, I don't want to put my
more-
stop there. If theoretically, I mean, if I had a trade, and it's not a recommendation. It's that we understand retail trader behavior, and we want to think like a retail trader. We don't want to act like one. 96 stops going off. You see them? Where do we go here? This. So we can come up into this, and if we just pop, and there's no follow through, then we have the potential, and there they are. So let's see. We still have the potential unless we go rocketing through here. Then the trade will probably fail. This is your stop pick. So now we got to observe the behavior.
IB alert.
Is everybody tracking? Come on.
ES.
Absorption ES sellers at 3,800.
So this trade is probably going to fail. So let's see. Big volatility today. Okay?
S&P by stock 255. Iceberg ES by 504. Absorption ES
Close.
buyers at 3808.
No cigar.
S&P by ICE 500.
Now I'm only
Absorption ES
discussing
buyers at
these relative to a full
3,895.
failure. There is no trade management in this conversation, right? That's something you guys have to just, kind of determine how you would want to manage the trade. And there's a couple ways to think about it. One is reversal triggers, like this. Here, you see it? That's a reversal trigger. Is that your exit? Or what? Or is it above this? Is it above this? Where is it? All that's up to you. I'm just showing you triggers, scaling, targets. The trade plan is yours. And the reason for that is it's something you have to vet and create statistics. And everybody is different as far as what their objectives are and the time frame they want to operate in. I operate in the inside-out time frame because of where I want to, how I execute. Trade management is a different issue, and I can't solve that
Short 2P.
for the individual
Short
trader.
2P.
I hope that makes sense. I think this is a lot, and then it's up to you guys, how you want to, how you want to use it. If you find any value, or use in it. No, Steve, you can't tell who's who. They're not tagged by that. We do know icebergs, are more sophisticated than us. That part we know. But you never know, are they getting long? Are they covering a short? What are these guys doing? I have no idea. I thought this was a pretty good trade. But, but it was either here or here, right? And after the pick, we could either come back in, which I think we did one time, right? Wasn't it here? Yeah, see? And get to here. We didn't get there. Close. So this is a structured, potential. Whether they work or not is the other part of the, the thing. But it is a risk neutral. So my thing is to try to get risk neutral, and then your trade management comes after that. That's something you need to do. But I think these are all usable.
ES.
Absorption ES buyers at 3,811.5.
ES. Check
Short
contact
ES.
by 3. Long 2P. Short 3 by long 2P.
Resident, I find my targets, well, which ones are you referring to? What kind of targets? The developing targets? That's what this is. This is the developing time frame, and it's mostly built on retail trader behavior. The higher time frame targets are volume profile created multiple time frames. This is an intermediate time frame, and it's built on previous behavior where we had overlap. This is a higher time frame, a low volume area that we can pass through. This is an artifact left behind from a previous day when we last time we traded up here, which I got to look and see when it was, but I can look back somewhere. Oh, this is from that naked volume point of control is May 20th. So we haven't been up here since May 20th.
NQ, short midpoint reversal. Short midpoint reversal.
So we checked it. And if we don't get back here, then we can, and if, in other words, the market at the moment is saying this might be too high. If we don't get back here and take it out, then we still can come and return, which is the basis, by the way, of the shorts off the top, back through here, and looking for this. See, there's the basis of it. The fact that we didn't do something is, it's trading, So now this is back on, potentially we could still do this. And if we get through it, then we have more upside. And again, I have no idea. Because this might be done to the upside. Or this is a bullet train, and we can come all the way back up inside. I got to look at a higher time frame chart now.
Absorption ES sellers at 38.20.
No bailing. Honor your stop. Honor your stop.
Nestor Kine, you're in the Trader Lab.
ES, short 2P. Short 2P.
Kim, I enter my trades on Bookmap. Right here, you can execute right on the chart, which is really the way I like to do it. So right here, you just, I mean, there is a dome, but I find it's better for me not to look away. So, theoretically, I can put it in, assuming I get filled. I don't know if I want to be filled, but let's just say. So there, so now it's a bracket order, OCO.
NQ, long midpoint reversal. Long midpoint reversal.
So yeah, it's I really like it because I can now I can move these around, if I want. That kind of thing. So
ES, short 3x3.
so and because I want to be right here. If I'm looking over at a dome, I always found that it was hard for me to do that.
Absorption ES sellers at 38.24.
ES, short 2P. Short 2P.
Rare. I use Investor RT by Linsoft, but it was one of the early software products that was really oriented and did a great job with volume profile. So I think I got it in 2007 or something. I mean, I used CQG when I first started doing market profile in the 80s. CQG, was I think CQG was the first one to get it because I think I was using CQG in 80. I don't know, 84, somewhere in the early 80s, but the old TQ 2020s, and then they got their System 1, and I think it was the System 1 that had market profile. Kind of hard to remember. But I use CQG most of the time, up until more around 2000.
ES sellers at 38.25. Stop ES by 350. S&P buy stock 350.
I guess the long was okay over here, huh? What do you think?
Check context. Check context.
Trade in context.
Yeah, Quotron. Yeah, yeah. Now, repeat, I don't know. You know, it is after learning IRT and all the programming, the stuff I did, and I just can't deal with it anymore. You know, I don't want to learn a new piece of software. It's just one of those things. Besides, it's insignificant in the scheme of things. It's just like Bookmap and the MBO package and, you know, rhythmic data. You know, what is it, 5 points in the ES per month or something like that. You know, I don't think too much. I mean, can the tool give me 5 points in a month? I hope so. It's just cost of production, you know, and it's like losses are cost of production and there's overhead to run your business. You're going to turn the electricity on, you got a cost. That's my mental state about it. I mean, I always want to spend less, obviously, you know, but again, it's learning different tools and the time it takes. And I did, you know, years ago, I did custom coding and stuff here, you know, which isn't really material, but anymore, but early on. So that was kind of what I did.
ES sellers at 38.30.
So yeah, I'm kind of like, oh, leave me alone. No more, no more. I don't want to put my energy into that, you know, into those areas. How are we doing here with the naked volume point of control? If I had held this, this would be the target right ahead of this. So you know. Why? Because it has statistical probability.
NQ, long impulse.
So let me see. Here, 20, I guess I should have held that one, no?
Check context.
10 points? What do you think?
Absorption ES buyers at 3,831.25.
Soren, the only coding I did was early on. I did coding on what was the development chassis of TradeStation when I was doing system design before TradeStation was available. So I did that kind of coding, and that was really more retail-friendly coding. So, because I was developing systems, so yeah. But IRT is more. The coding I have in IRT is really kind of a different animal. It's simple. It's really, you know, once you do it, I never want to throw it away because of the brain damage I got trying to write code. You know, it's not my thing. It's just not my thing. Boy, this market is interesting, huh?
ES, short 3 by 3. Short 3 by 3.
Well, Rainier, I think there's a lot of guys who use Sierra, you know. I mean, you can use whatever works, you know, it doesn't really matter. It's whatever, you know. I mean, back when I was doing my thing here before I got into IRT, I don't think we had Sierra or Ninja. I think those came out around 2000 or so, maybe late 90s. You know, I can't remember anymore. But I just didn't go there, you know, you kind of stick with something.
Short 2P. Short 2P.
Yeah, Mark, you know, Bookmap is an order flow tool, and for me, it's a execution platform, you know. And then I'm using what I read in the auction, and you can see this on other platforms. I don't know about the intraday. You know, if you can see, you can slice it down like this. That part I'm not aware of. But this is very important for me to read these microstructures. And I'm doing the same thing that's manifest over here. I'm doing the same thing in here. You know, that long, this is a microstructure that is a buy trigger. This is a buy trigger. This is the retracement, right, to the micro volume that was right in this structure. Chop, 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 break low, break high, buy trigger, pull back to volume long. And I'm just sitting here. I'm going, yeah, okay, I just want to show you how we execute using the on chart. Very simple. Align with the trend. Target was this. So that would be a target for me. Then there's another one up here. But the point is, this is how I work, is I just kind of go, it's like stepping off the curb, running across the street to the next sidewalk.
Point reversal.
This is a 10-point trade, right? Target was sitting out there. So, I mean, we knew that. But anyway, I'm just saying, right? Repeat, you must be having a fun day.
Mark liquidity. ES. Mark liquidity. Long 3 by 3. Long 3 by 3.
Peter, you can use Rhythmic. In fact, with Rhythmic, with their API, you can basically run Bookmap and Rhythmic off of one feed. And also, there's an order transport, so you'd be executing over, through Rhythmic. As opposed to paying extra, for another license for two, as long as they're on the same computer, So there's an API for that. I have no issue with it. And I'm pretty thrilled to only pay for one, one iteration and not like, quote, two, pieces of software.
ES, short impulse. ES, short impulse. Check context. Check context.
So now, if you're a counter trend trader, this is a short. Would be your target coming down. We're going into the cash close, right? You can see it, can't you, here? But now this coming, see, so we had this on the way up. Now we have it on the way down. Price check. So let's observe it. And I have no idea. But if you're a counter trend kind of guy, not necessarily my game, but there's range, you see. So from here to here is a 10-point move. Is that doable? From here. Up to you. Where's our structure down below? Here. So let's see. Not a recommendation. I'm trying to help you read this thing, because if it's not in your trade plan, you're not a fader. Darth Fader. But when you see this, you might think of it as a reversal structure. Is that a trade management tool? And I'm putting the question mark out there because I want you to think about it. Standard trader, there are no deals. If there is one, you call me up and let me know.
ES, long 2P. Long 2P.
Absorption ES buyers at 38.20.
Peter, you just got to do what works, Whatever there's no... See the randomness of all this? So if you were short here, this would be your scale. And then helmet. Potential back where? Here. Or not. We don't know. See? So retail stops are under here, and we're running out of time, aren't we? And then, of course, you got this. If you get here, you may never get there. So it's trade management. Look where we are. So you do need a trade management process.
Balance, use higher
This
time
was the long.
frame, use higher time frame.
This was the next target. You could be done. Or you're still leaning against this level. Break low, break high, you know. There's nothing, I'm just telling you, for me, this was area of interest. This is a potential short, back to there, and then hold to the retail behavior, which is here, and then again back to here. Don't know. Again, don't know. But I want you to think about structure. How do you use structure? Can you use these triggering mechanisms to engage, to engage, to engage, manage, 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 break low, pull back out, or short, see? However you want to play it. Just something you can think about, right? That's why I'm here in the Trader Lab. Give you something to think about. And then, you know, and then in the lab, the objective is that all of you guys that are part of the Trader Lab think about this stuff and shape it. It's like clay. Mold it into something. And we all share it and work together on it. You got an idea? Put some metrics to it. Then let's kick it around. You never know what's going to generate an idea. And then someone takes your idea and makes it better.
Absorption ES buyers at 38.10.
Otherwise, we're just alone. And I don't see why that's an advantage. Remember, here, right? This is doable. What do you think? This. And then, maybe, this, but this. Why? Retail trader behavior. Are you guys getting something from this? Okay, and remember, if you're sitting over in YouTube, hanging out with your feet up on the desk, I invite you all to the Discord Bookmap Trader Lab, so you can collaborate and be part of a community. And it's interactive, so unlike YouTube, you know, where you can ask questions, but you're not part of a community. If you think there might be value in that, based on what you see here, and derivatives of this approach. And it's just not just this approach, but this is kind of what we're building ideas around in the Trader Lab. And you're also invited. There's free education for everybody, whether you're a Bookmap subscriber or not. On futures, stocks, how do you use these tools with stocks, options, crypto. If you want to, you know, walk on the wild side, there's something you can do something with. There's a lot of different traders and different product, you know, not just ES, you know, subject to what your, you know, what your thing is. Also, you come to the Trader Lab, join a community. There's also, just for coming in, there's about 80 downloads of PDFs I created of examples of these behaviors that you can review and think about and maybe incorporate them into your process if you see any value in them. And there's a primary webinar I did that kind of gives the kind of a snapshot of the approach, at least my interpretation of volume profile, auction market theory, and mechanics. And it's just there to kind of get you kick-started if you're inclined, you know. You may look at this and say, nah, this isn't for me, and that's perfect, because that's the only purpose. That's the purpose of me doing this. But if you've been kind of trapped in indicator world, looking in the rearview mirror, try to curve fit something, you might find that there's, with indicators, you're not learning market mechanics. And you're always looking for something and really a plug-and-play solution, but you're not even conscious of that because you think that's what trading is. Trading is not indicators. I mean, they might support what you do if you can find a way to integrate them, but in the end, it is market mechanics. And indicators are reflective of what's going on in the market. It might be helpful to really understand what goes on in the market, why this is a potential short, understand why this is the target. And from this
IB alert. IB alert.
to here, I think is okay. If you think it's okay, this is market mechanics.
Long 3x3.
NQ, long midpoint reversal.
Yeah, right. You need DX feed for stocks. If you're not going to trade ES, you don't really need rhythmic, really.
Balance, caution, caution. Enter outside.
Because you can trade stocks, you never have to trade the ES, and then you don't need rhythmic. Rhythmic provides only CME, gives you market by order so you can see the stops and the icebergs. You don't see that, and you don't with the stocks. Stocks don't have this. You will see the liquidity in the order book, which is in stocks, the behavior is a bit different, and the order flow is a bit different in the stocks. So you only need DX feed. And that's a subscription like everything else, but you don't need it. So if you're a stock person or an option person, you're gonna with DX feed you'll have the Qs, the SPY, and plus the stocks, and then you can apply these processes like what you're seeing here to those products. It does work, and we have and you can attend seminars or webinars every day. There's a webinar on order, understanding order flow and Bookmap, of course, and different tools in Bookmap that are available. There's more than what you see here that come with the subscription. And I'm not in the subscription business, that's not what I do, but you can go on the website and just look at the tools, read about it. And if you're into stocks, kind of what it is, figure it out. As far as what you might need, you can do it on a trial, but whatever you want to do. But I think order flow is pretty important because it just gives you another tool. And to me, it's not indicators; it's just intent passive orders and how the market tends to trade into them, why, and understanding behavior, what the purpose of this is, and then the reaction of the market is really the important thing. This is why we were going for this target. And then if we get under here, we've got this. But this is primary because of that. Does that make sense?
ES. Long 3x3. Long 3x3.
Peter, I agree with you. Well, you can't get a stops and icebergs with DX feed. Don't matter because it doesn't exist. DX feeds are real good. I mean, you get all the stocks. Level 2, I suspect, is what that's called, right? And you'll see what's going on. I mean, you'll have the order book. You'll have the book, you'll have the liquidity, that's a lot. And you'll have all this other stuff. There's other things too. You have absorption indicators, there's all kinds of stuff. So large lots and there's a lot of other things that give you an edge, I believe, but again, it's got to be something that is an advantage, and you won't know. I mean, I kind of think it's an advantage.
ES. Short 3x3. Short 3x3.
I mean, it works for me. I can only talk about, what I've done. I was never able to use order flow because my brain could not, in other words, I never tried to trade by watching this stuff. It just, I couldn't remember where something was or where something happened. I tried to write it down. It was just, I couldn't do it. but I always wanted to, but it wasn't my thing. So when this became available, and I think in 2015, I said, oh, finally, good, there's a tool for me. And then, of course, I had to spend time to figure out what the heck to do with it because I didn't understand it.
S&P sells stock 254.
And that was, Bookmap education, really.
IB alert.
I'm okay with this trade here, And it's just one. The thing about a trade is it's just one. It's one. But you need those. So for me, it's risk neutral and then targets. This is the target. So for me, if I'm only running 2, this is number 2 is out here. If I'm running more, I'm going here. That's it. I'm okay with that. So if you can understand the potential behavior within the context, and I'm not saying, and again, every outcome of every trade is random, so there's no way to know, that it would ever get here. But that's trading. It might have been a full stop. It might have been a scale and a stop, or a scale and a target. So it would be from let's call it 3,800. 3,800 to 3,835 plus your scale. So call it a 3-point, 4-point scale. It's about a 40-point trade, right?
VHVN.
45-point trade, 2 lot.
VHVN.
That's why I talk about 2s and I don't talk about anything more than that. Because I think that's a minimum configuration and you can build a plan around it. Now, normally our ranges are not like this, but this when the market, one of the points I always try to make is the process is generic. It's what the market offers us. What's the range? If the range is 40 points, we can work with 40 points. If the range is 8 points or 10 points, that's what we work with. The process is generic. So anyway, I hope you find some value in that. Build a trade plan.
VHVN. VHVN. VHVN.
Mediterranean, I have no idea as far as potential regulation. I've heard about regulation for a long time.
VHVN.
Yeah, Mr. Clips, wild day in the supermarket.
ES, long
VHVN.
2P, long 2P.
VHVN. VHVN.
You guys in YouTube, if you're just dancing here, welcome. I appreciate you being here. Feel free to come over to the Bookmap Discord chat. Nobody will bother you, but there's a lot of free education, stocks, options, crypto, plus what I do. And downloads, about 80 of them, of the processes I use and examples with a lot of detail and annotation. And a webinar I did on the kind of an overview of auction market theory, volume profile, and integration with some of these ideas you're seeing. You can register for free. Go to bookmap.com, Discord. You don't need to be a subscriber. And again, there's education not only on reading order flow, using the tool, but also how to use these tools with and other tools with stocks, options, crypto, other futures markets, NQ, crude. We haven't gone over pork bellies, but I'm sure if there's any pork belly trader out there, When the S&P first came out, and I'm trying to remember when it was, I think it was in 81 or 82, I think, I don't remember, but it was $250 a point. and we called them pinstripe pork bellies. Just so you know. Interesting. Fun facts no one tell. Salmon futures? Never heard of that. The MOC, you know what, Anti-Luck, I am not, I have a philosophy, and I'm not saying it's right. I'm just saying what I've adopted over the years. Those who know, or it's going to be reflected in the price by the participants. So the fact it's going to be negative, I don't know what it's going to be, and of course any input can disrupt the market, so I know that. But I'm already would be on a trade in spite of that. You know, in other words, it's almost like there's going to be a report coming out, depending what it is, of course. If I can get risk neutral in front of the report, then I might be in for the report. If I get taken out on the report, I'm out. And then if I see another trigger set up because it was just a squeeze or something, then I'm back on the same trade. I will take the same trade even if I'm taken out, as long as the structure I'm leaning on, or shall we say the context, is in alignment. So other than annoyance and, you know, having some choice words, you know, 3,800, watch the IB. So here's your pullback, and it's still a short. Not now, of course, but I'm saying in theory. Okay, can you see it? Let me blow this up for you. I'm not paying attention here because I'm tired now.
Absorption ES buyers at 3,795.5.
So there's nothing to do. It's all the algateria here and cash close. So, you know, finito. Hope you guys got something out of this today. I mean, you know.
No bailing. Honor yourself. Honor yourself.
Oh yeah, repeat. You know, when early on, when I first started trading, I used to trade the old crop, new crop bean spreads. Is that what you're talking about? Yeah. That's a great trade, except when it flips on you, you know, with all that leverage you get. Margin is 50%, guys, on the spread trading, and 50% of, you know, regular margin. So, of course, the inclination is to load the boat. I've been there, done that. And before we had currency pairs, I did a lot of currency spreads, you know. Yeah, anti-luck, I mean, what I do, I think, takes a little time to get your brain wrapped around. And I'm not saying it's, you know, I'm not saying there's a better way to do anything. But I do think indicators, I don't use any indicators because I'm driving down the Autobahn looking in the rearview mirror. I really want to try to understand what the market is trying to do, and at times during the day it is changing its behavior. It's you know, goes from directional to rotational, counter, you know, it flipping around like a flounder. So I'm trying to stay in alignment, and today's not one of those days where it's an, you know, easy. I don't think is the appropriate term, but it kept changing, you know, so I was trying to stay in alignment. And I think we had a lot of good opportunities that we, you know, reviewed here that developed, and also ones that didn't work. This is the real world. And, you know, I mean, it's not a trade calling room, but we are doing the same thing generically across multiple time frames. I think that's the message. Then it's, if it's a tool, and like all tools, it works at times, and at other times it doesn't. And it's really about understanding market mechanics, and also how the mechanics change intraday. You know, that's the other element of trading. You know, we tend to be have kind of a look to it, you know, where like in one mode, and we try to apply one mode to a market behaviors that are multidimensional and multimodal. And I think one of the complex aspects of trading is understanding when it changes. And of course, we don't know when it's changing until it's changed, and we normally pay for the privilege to find out, and you know, when we get off sides. There's just no way to avoid that. But if you can recognize the change, then you could potentially get aligned with it, and you know, those changes and those trades that don't work are cost of production. It's really important to get past the point of attachment. This VPOC shift is an important element for potential continuation tomorrow, or ETH at least. So you got to keep an eye on that, or at least potential start out in the north side and then, you know, go from there. So I got to be updating my levels, right? So what you do in the what's called a micro composite, you take the last couple days and you overlap one profile over them. Yeah, Repeat, thanks for dropping in. Good to see you. Well, great. I'm glad you guys got something out of it. Well, I don't know. You know, I'm just, oh, look who's back, David. You know, David's in Amsterdam. David, how's the espresso? Otherwise, he's asleep at the switch. His cat does his trading for him. And guys, this is not the answer. This is a opportunity to maybe learn market mechanics and get maybe a better understanding of how this all kind of fits. And yet it's your job in the Trader Lab to collectively leverage your experience in the tools to make it better, you know. So that's why we're here. So I hope we can accomplish that together. And anyone in YouTube, if you want to be part of a community, it's free. Free is good. And please come over and contribute. That's the objective. So, and you can access the PDFs in the Trader Lab. There, you hit the pin, it'll take you up to the top of the text channel. You'll see download of PDFs. You'll see a introductory webinar that I did for Bookmap on what I do and, you know, this process. And, you know, see if it resonates with you, or maybe it's something you can, you know, get something out of that you might find useful. You know, there's no right way to trade. There's really only the way that works for you that you can develop belief in. You need to manage your fear. You need to understand where it comes from, which is the psychology of trading. And the way to overcome it is to have a vetted process. So just like the casinos in Vegas, if somebody walks out with a $100,000 suitcase of cash, you know over the large sample size that you have a profitable business. It's no different than running a manufacturing facility where a machine breaks down, you have expenses, people quit, you got to pay that, you know, whatever it is, you know, that's just overhead. At some point you can try to separate yourself from the mental challenges of trading. The way to get there is to have statistics that you lean on the stats, because your job at some point is to follow a trade plan that has statistical validity, so you're not gambling. Because if you don't have statistical validity, you can't have faith and belief. You're always going to be going back to the drawing board for the next indicator or some curve fit to solve the problem. Unfortunately, it doesn't solve the problem. So you might want to, you know, maybe rethink what you're doing if it's not working. And if it is working, maybe you can make it better. But you need to have stats, or you can't get to that place of peace and detachment, because you know it's a random distribution of outcomes. You know, every trade is like maybe at best, right? So then it's scale, try to get risk neutral. So now you can see if the trade goes on to what you perceive as its logical target based on the trade plan you have for that particular interaction with the market, or setup as they're defined. Thanks again for being here, everybody. Appreciate it. So I'll be here tomorrow, hopefully, right? And a $20 sandwich, huh? Well, you know, I can't handle that. That's where I go, not too high. Thanks. Thanks for everybody. Thanks for everybody being here. We'll see you tomorrow.
Absorption ES buyers at 3,793.25.
ES, long 3 by 3, long 3 by 3. No bailing. Honor your stop. Honor your stop.